Good morning. I'm a couple minutes early. Discord is chugging a little bit, so I want to make sure that we're running smooth and you guys can see everything okay. Good morning, good morning. D-Rock, Luciano, Snorri, Miss Debbie, always nice to see you. Alan, how's everyone doing today? How was your day yesterday? Everybody do all right? Have some fun? Take some trades? Follow some rules, I hope? If you traded after the market or after class, guys, and you have pictures, please feel free to bring them in. Work yesterday. Ah, that's a four-letter word, man. Of course, I had a four-letter word too. It was golf, and it did not go great. I deviated from my plan. It's funny how golf and trading have so many similarities. Um, it is, what is today? Today's Tuesday, the 26th day of September. Um, Pretty cool. It's almost October already, which means that all the Christmas decorations are in the in the stores already. And guys, exactly, Ron. 9 a.m. S&P Composite 20-year HPI. 9 a.m. That is a medium impact news, which means that it could move the market. It could make it bounce a little bit. Let's take a look. We know we have news coming up. There's your S&P coming off of a termination condition with odds favorable momentum. Let's see if there's a reaction to the news. And this is one of the reasons I check news every day as I come through, and I just want to know when something is happening that may make the people who move the market react to the market. John and I were talking this morning, and it was funny. We were talking about getting in real close to fibs and calling tops and bottoms and stuff like that. Um, and we were both kind of giggling. It's like jumping in between Mike Tyson and Evander Holyfield, drunk and going at it in a bar, and feeling like you're going to be able to break it up. Um, that's kind of what that's like. Oh, that is MES, isn't it? I put that up there. I always have that up there for you guys that want to do MES earmuffs. I remember that fight. Um, Thank you for that, Luciano. Virtually the same. Look, I do that because there's a lot of people that like to trade that micro ES. So I always bring an MES up so I could show the correlation between the large ES and the MES because really they're almost the same market, but they are different markets. So they're going to have a little different look. There's that 9 a.m. Let's see if there's a reaction. Doesn't appear to be so far. Good morning, David B. Nice to see you. Well, Ron, your news was a bust, my friend. Good morning, Mulu. Yep, looks like they don't have much reaction, but we knew that there could have been, right? Watch this. I'll go away from it and it'll go nuts. Every morning, I'm checking it out. 9 a.m. we had that S&P Composite. It was only medium impact. Uh-oh. All right, trying it again. Can you guys hear me now? Did a little reboot. Now I'm back. Can you guys hear me now? How about now? I rebooted my microphone. Anybody? Nothing? All right, guys, little reload. Did you get me now? How we doing? Anybody? Nope. Nope, nope, nope. All right. All right, guys, what do we think? Do you have me now? Awesome. I knew Discord was chugging this morning. So, guys, if something goes sideways, please let me know. Because I won't be able to tell that you've lost me. So, if it just gets quiet and you see my mouse moving, somebody go, "Hey, Mart, it happened again." And that happens about twice a month. Discord likes to remind me that it's in charge. So, I'll give everyone a second to come back in. But yeah, news was a dud this time, but it always has the potential to move stuff. At 10 a.m., we have high impact, CB consumer confidence. High impact tends to move the market a little more than medium impact, than low impact. So it's not that we're trading the news, right? We're not sitting on the sidelines going, man, I hope CB consumer confidence is a good number because if it is, I'm going to go long. Or if it isn't, I'm going to go short. Good morning, Sydney. What we're going to do is we're going to say, hey, the guys that move the market may have that plan in place, making a reaction, which means that when they dump 1,000 contracts into the market, it's going to jump, and if it jumps fast against us, guys, it can create problems. So this is part of my routine every morning. When my charts are opening up, I come to forexfactory.com and I just check and see what's going on. And then I like to take you guys from there to here. This is the tutorial section. This is the software user guide. Guys, this is where everything that I talk about comes from. True story. There's no secrets, no secret handshake. There's not like this backroom club where you guys get extra information if you pay a little more money. Everything that you need to be successful with the software, you will receive from me in this room. So don't go searching for more. If I don't give it to you, you probably don't need it. And I know that's a weird concept for a lot of people because if a little is good, then more's got to be better, right? But we're not going to do that. We're going to keep it simple this morning, guys. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. I am going to cover in the first hour a high probability trend trade. This high probability trend trade is a trade that typically wins 70 to 80% of the time. And the high probability trend trade is not designed to be the end of your journey. The high probability trend trade, really? Son of a bitch. All right, guys, can you hear me now? Oh, this is gonna be one of those days. That's all right. There are no bad days. There's only bad moments in a great day, right? Good morning, Mike M. Nice to see you. So we're going to talk about this high probability trend trade, and we're going to do it because really it's going to make you a chart reader, guys. This is my goal for each and every one of you. Is that you embrace the idea that you're a chart reader, not so much a day trader. And your chart reading that comes from your study of the high probability trend trade, from recognizing the advantages that create that trade, you're going to understand the three very key concepts that'll never going to leave you. And it's you're going to understand by looking at your indicators where the market is likely to continue. And this continuation point is going to be your entry for the highest probability trend trade. You're going to understand where the market is likely to go. You're going to be able to use these Fibonacci areas. You're going to be able to use momentum indicators, and you're going to understand where that market is likely to push to. And this is going to help you with targets as you grow with the software. And then finally, you're going to understand where the market is likely to stop, guys. And this is your trend ender. This is where the market is most likely to stop and reverse, where it's most likely to create a bounce that's untradeable for you, or where just indecision is going to happen, guys. And these likely to stop areas are what we call termination conditions. And a termination condition just it ends the party. It puts you into being patient mode. And the cool thing is these termination conditions, once you begin to recognize them, you're going to find that they behave as an anchor for the highest probability trend trade that you can take. For the trade that we're going to talk about here in the first hour, a trade where every indicator on every chart agrees for the trade. And that high probability trend trade that happens after a termination condition, guys, is a trade that typically wins between 70 and 80% of the time. And that high probability trend trade it revolves around just three rules. Um, and the recipe for it is momentum, a clear path, and an entry area. Each of these advantages is what creates the trade. And the advantages are going to happen on only two charts. We are embracing simplicity. You're going to use a large chart, and it's going to define direction, and it's going to define momentum, and it's going to define areas. And this large chart leads the way. That's one of my favorite phrases. I swear I'm going to go to Etsy and get coffee cups built. The large chart leads the way. It's a broad stroke of a brush. It tells you exactly what the large crowd, the people that control the market, want to have happen. Defining the direction of the chart. You'll understand the trend through one bar on your large chart. You'll understand whether or not that market has momentum that's advantageous. And you'll also understand if it's coming into one of those key areas, guys. So the large chart gets everything going for us. And when rules one and two are met, you will have the advantage of momentum and you will have the advantage of a clear path, meaning that there's nothing between you and your targets. Once those are in place, we turn our attention to the small chart. Once those two rules are true when they're met, and the small chart's just going to refine that broad stroke of a brush. It's this one bar on the large chart that defines all of these things that gives us our rules met. Good morning, PFI. Nice to see you back in here. The small chart is going to take this one bar and break it down into about 15 to 30 bars. And the small chart represents what the small crowd wants to have happen. Typically, these are the guys that want to fight momentum, that want to fight the trend. These are the guys that aren't waiting for those key areas. They're really just hoping the market goes down from nowhere. We love the small crowd as Nexgen users because they're going to push us back straight to our entry point, that point where the market is likely to continue. And that's what rule number 3 does for you. It defines that area. And this is where my Nexgen users are going to get in. Texas had a religious holiday yesterday. I don't know what that means, PFI. Care to elaborate? So the idea is that we're going to use the large chart. Was it just in Texas? Barbecue day. We're going to use the large chart to give us strong triggers. We're going to have the large chart to define those areas. Oh, right on. And we're going to use the small chart to enter the market, guys. So this is going to be our plan. We're going to learn the rules for when it's okay to trade. I need you guys to simulate. I need you to get through. Amen, Bobby. These heathens that only do it once a year. I want you guys to practice, and I want you to practice lots, and I want you to use that simulator because, guys, you can't lose money on simulator. All you can do is become a better trader, a better chart reader. But I want you practicing the right rules, which means that I need you to write the rules on the chart every time you take a trade, every time you present it. We're going to simplify a lot in this classroom, guys. We're going to keep it very laser focused. I'm going to give you as little to think about as possible. 3 rules on 2 charts is not a lot going on. And the idea is that you're going to learn the Fibonacci and trigger looks so that they become easy. And that's just repetition, guys. That's the one thing that Nexgen can't provide you is experience. I'm going to give you the greatest software in the world. I'm going to give you the education so that you learn how to read it. And now it's just going to be up to you to keep getting reps, right? To keep running laps until it becomes easy. So your step-by-step path to becoming a confident trader ASAP begins with posting your trades in the class. It begins with posting your chart reads in the class. And it begins with you really embracing the idea that the camera is your best friend. And when you annotate charts, I need information. In order for me to help you, I need some information on there. I need you to write your rules on the chart. I need arrows pointed. Cream White, since you will know where that area is, limit order. Right? Won't you know where that area is long before it gets there? Because you're such a good chart reader? Absolutely you will. So we use limit orders to enter because we're that good, guys. Write your rules on your charts, and I want you to get in the habit of writing out what the rule is, or even better, write out the advantage that the rule gave you, and then Draw an arrow to it so that you begin to associate the look with the words of the rules being met. I'd love it if you'd show me your timestamps and your price so that I can line things up, where exactly you got in. And then to help me a little more with that, guys, I want you to right click on your entry chart, go to data series, and make sure that you're showing me your text and markers getting in. If you don't like that clutter, maybe you have a little bit of OCD, I want you to use a circle or a square right where you get in, and I need them to line up on both charts so that we can talk about the rules and the advantages. So this is how you're going to annotate your charts for the absolute best feedback. And then for my new users, let's take a picture. Capture software was downloaded. When you got your indicators, it was downloaded on your computer. And if you go to your search bar, if it's not right there, all you have to do is type in tech, T-E-C-H, and it should bring up your TechSmith Capture, guys. This is about the easiest tool you're ever going to use. You're going to click this big red button that says Capture. And the idea is, since we're two chart traders, I need two charts, which means that you have to left click at the very top of your left chart and drag it all the way down to the bottom right, making sure to get those timestamps, making sure to get those prices. When you release, it's going to give you the option to take a picture, capture an image. So I'm going to click that capture an image, and up comes the picture that I just took. And guys, this on its own is great, and I'm pretty good at chart reading. I can look at your charts and understand what's going on. The idea is that you learn to look at your charts and understand what's going on. So what I need you to do is right up at the top, we have all these different tools. The arrow tool is great for you pointing out things that you notice, right? And then the shape tool is awesome. Maybe for entries, right? Maybe for concepts that you're working on. But the most important tool that you can use is the call out button. And it's just left click, drag it down, it creates a box. But this is how you're going to write your rules. This is how you're going to tell me why. And I want you to embrace that idea that every time that you take a trade, every time you post a picture in class, pretend like I'm going to look at you and say, why? Mark, I went short. Why? Mark, I went long. Why? Tell me why. Tell me that you had momentum. Tell me that you had a clear path. Tell me that you took an entry at an area inside of favorable large triggers. Other things that you can tell me. Tell me how you feel. Were you nervous? Were you anxious? Right? Were you confident? Were you calm? Because all of those words play back to your understanding of the rules. And what you'll find is you will become more and more calm and confident the better you are at following rules. So this becomes our conversation, and I need you to write on the chart, to point things out, and then just click this copy button in the bottom right. It's going to put it onto my clipboard, and I'm going to post it right in the room, guys. If you're not in the pop-out, it's just copy-paste. If you are in the pop-out, you're going to need to hit Control-V in order to get that picture in there. The next thing you're going to do is you're going to click the blue button that says Upload. And that Upload button is going to give you a link to the picture, app.screencast.com. I want you to click that link. You can also drop the link in the room if you want. That'll bring me a link right to it. It'll open up in a web browser. But this link of the picture that you took, of the trade that you just took, is going into your spreadsheet. And this is the second half of becoming a confident trader ASAP. Whoops. And I'm going to show you on that picture. You're going to post your trades in class, and then you're going to track your real-time performance in a spreadsheet. Nexgen has provided you the spreadsheet. It's in Nexgen Study Picks. If you go to your search bar and type in Nexgen 90, whoops, maybe not. I don't know what I just did there. Here we go. Or 90-day, there we go. I didn't leave a space. 90-day training worksheet, guys. This spreadsheet is designed to be a trade journal. So your first page is the copy of everything that you do. Every time you pull the trigger, I want you to put that picture right into here. And you're going to talk about it. What kind of trade was it, right? How did you feel going into it? Because, guys, this is very important regarding your rules. It's going to ask you the conditions where your rules met. What did they look at? But the most important thing is in these rules, I want you to put rules met or broke rules, right? Start taking a picture um, and recognizing whether or not your rules are met, whether they were broken. Your results will typically reflect what you write there. But guys, this becomes such a huge part of it because what you're going to do every morning is every trade that I took yesterday, guys, I woke up and I gave myself 5 minutes with a cup of coffee and I studied them. Good morning. Nice to see you today. And I studied them. I looked at them. What worked and what didn't work, right? What got me into the market with confidence? What made me nervous? And guys, this little study, this little historical study each and every morning is going to prepare you for the day and it's going to accelerate the learning. Because you're going to look at it 5 minutes, that's all it is. But you're going to say to yourself, oh my gosh, I traded in determination conditions yesterday. I need to not do that today because it took the money right out of my wallet. It made me nervous. Or I fought the trend or whatever you did. Or maybe I just followed all my rules and I had the best trading day that I've had in a long time and I have all this confidence I want to repeat it. But 5 minutes, guys, each and every morning, study yesterday's trades. You will be absolutely flabbergasted at the progression that you make with the software. So post your trades, track them in your spreadsheet. Guys, we're going to take the next 40 minutes to talk about the rules for the high probability trend trade. I want you guys simulating, posting those pictures, writing on your charts. We're going to simplify. We're going to focus on the high probability trend trade. And then we're going to talk about what's called a 50-50 trade as well, which is a medium probability trend trade. And I want to go to the glossary of common terms to talk about this. The high probability trend trade, the trade that teaches you to read your indicators, the trade that typically wins 70 to 80% of the time. Guys, this is your focus for 20 days. Your first 30 days with Nexgen should be 100% focused on finding the entry for the high probability trend trade. Because when you take an entry with this many advantages, it makes trading 1,000 times easier. From the high probability trend trade, as you learn to read your indicators, you will probably introduce what we call as a medium probability trade. And honestly, this is when one of the advantages go away. A medium probability trade is defined when most of your indicators line up for a trade, however, a small issue exists. And I want you to notice that it says a small issue and not a whole lot of issues, right? One small issue exists. Your chart reading that you develop through the high probability trend trade is going to teach you to recognize that issue. This will probably be the vast majority of your trades, guys. And when you're executing these trades, you're going to have to take them and manage them assertively. Your chart reading will allow you to manage them assertively. If there's trouble in your way, once again, your chart reading is going to identify that trouble, and it's going to allow you to take a portion of your position off at the trouble spots and get to a zero loss level. I'm going to tell you right now, yesterday, I took about 5 trades. And when I took 5 trades yesterday, not one of them reached the target, but I still reached my goal. And that was because I learned to read my indicators. I became a chart reader and I could manage my trades assertively. And that's exactly what we're going to do for you. Write some rules on that chart, PFI. We'll get to it in the second hour. So guys, without further ado, let's go through and let's talk about 3 rules that create a trade. The first rule happens on the large chart, and it's strong triggers. Hey guys, this is going to be one of the easiest lessons that you get today because it begins with trend. Strong triggers can't happen if you're fighting the trend, which means that the second you decide to go counter, you abandon the first advantage that gets you into a trade. So trend is defined by the color of the background on your large chart. Green trend. Green chart means up, red chart means down, and you're only looking for rules to be met for that direction. David Bout. So, David, guys, okay, so nobody ever believes me when I say this, right? Everybody's like, oh my gosh, I don't really want to do it. David, if you wrote these rules on the chart, do you suppose it would help you identify the entry on the smaller, faster chart? The answer is always yes, right? And and if you don't think that it would, an area inside of favorable large triggers. So David, if I wrote rules on the chart instead of entry and stop loss, first of all, how can you read that? That's so tight. But rule number 3 says that I'm going to buy an area inside of large triggers. But if I can't tell if the rules are met here, I shouldn't even be looking here. So let's break it down. Let's go through the rules today, and then I want you to stretch this out so that you can actually read the indicators and the information that they're giving you and repost the picture. But what we'll do is we'll go through it and we'll write rules on the chart because sometimes, David and everybody in this room, sometimes the answer is that the rules weren't met, that there wasn't an entry, even though you wanted there to be. Um, so we'll look at it. If you'll stretch out your large chart for me a little bit and repost, we'll annotate it together when I go through the pictures. But let's start with the trend, guys. And David, on your chart, you were looking up. I love it. Everything's set up. Green means up, red means down. Only trading with the trend, guys. It'll eliminate an absolute ton of mistakes. And just for the record, David, if I say, do you think it would help you identify, it means that it will. Without a doubt, we just got to get you to the point to where it does, and that's what we're going to do today, is we're going to get you to the point to where it does help you identify it. So we're going to start with strong triggers. We're going to start with making sure that we have the advantage of momentum, guys. When the trend is up, strong triggers mean that your small triggers, which are these solid lines, break above the large triggers. And space is created. The large triggers are dashed, the small triggers are solid. And it's this space created between small and large that lets me know that the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum, OFM. You're going to hear it every day, 1,000 times a day in this classroom. This should get the ball rolling for you. This should be the first thing that you look for, making sure that from the point where they separate until they return, this is the absolute best look, the strongest look in your triggers to push that market in the direction of the trend. You guys, David, you're going to be able to pinpoint your entry when these triggers look their strongest, because this is the best look for buying Fibonacci support on a smaller, faster chart. On a large chart, it looks like a tail, guys. Nexgen users will use that refinement tool to pinpoint exactly where that tail is most likely to continue. In a downtrend, there has to be separation between the small and the large. The triggers are wide, they're angled in the direction of the trend, and when that gap is present between the two, this is your strong trigger look. This is the best of the best. This is the look where it's the most favorable to sell pullbacks to Fibonacci resistance on a smaller, faster chart. And once again, what happens in this one bar on your large chart, I'm going to show you the refinement picture real quick. What happens in only one bar on a large chart to define momentum, trend, as well as areas happens in 15 to 30 on the smaller, faster chart. So we're letting the large chart lead the way, but we're going to refine it down to pinpoint where that tail is most likely to happen. So if space between the two means strength, when the smalls return inside of the large, it means weakness. Those are weak triggers, and weak triggers mean that anything can happen up or down. Weak trigger lines typically precede a reversal in the market. Weak trigger lines mean that the market is no longer likely to push in the direction of the trend. It becomes a little bit of a crapshoot, right? It becomes more of a gamble. So if we go to the live market right now, let's just take a look. My trend is down. I can define that through the color. And my smalls have just returned to the large, which means that while this is my best of the best look, my momentum is slowing just a little bit. Guys, give me a Y if you see it. Odds favorable momentum happens throughout the day. That's that best of the best look. Here's your indecision caught between fibs. There's that best of the best look, and there's a couple of those tails that may have been potential entries. Guys, odds favorable momentum, and I hate to say that it'll fix mistakes, but it'll certainly camouflage mistakes quite a bit when the market is really screaming in the direction of the trade. Um, so I'm going to give you this picture right here reminding you. Strong triggers mean that you have the advantage of momentum. Rule number one has been met. Weak triggers typically precede a reversal. And if you watch the market throughout the day, if you just kind of backtracked and look at it, you would see that odds favorable momentum is not a constant. The market is just a fight between buyers and sellers. And sometimes the sellers are pushing so strong that the momentum is odds favorable. And then they lose their momentum. And anything can happen. And notice that it precedes a reversal. A lot of the times, these reversals are going to happen at Fibonacci areas. But from the reversal, I get that odds favorable momentum. There's one of those tails. There's one of those potential entries for the Nexgen user. And the market, with all that momentum, pushes up until it's weak again. And then there's your reversal, creating odds favorable. There's a tail, and the market pushes down. And guys, this is going to happen all day, every day. You're going to see it on every market that you look at. If you decided to put your Apple stocks, your Tesla stock, you would see the exact same momentum when that market is pushing. This is our best of the best look. Sometimes your trigger lines don't agree with each other, or remember we said that you have to have the trend in favor in order to have odds favorable momentum. Sometimes your triggers won't even agree with the color of the background. Guys, this is when buyers and sellers are fighting for supremacy. This is when the forces that move the market are wrestling one another in the front lawn. And there's no reason for you to ever get caught in this. When you're larger down and you're smaller up, you don't have odds favorable momentum. Stop looking for a trade. When your trend is up but your triggers are down, you don't have momentum. Stop looking for a trade. Because ultimately, they will agree again and give you odds favorable momentum. But this is where most are tempted to predict what the market will do rather than wait for rule number one. And this is when all of you have done it. If you've traded at all, traders get crunched up in consolidation. Traders get run over trying to predict which way the market's going to go rather than simply letting the momentum tell them that that's where the market is going. So guys, that's rule number one. And rule number one is the first advantage of three, the advantage of momentum. It happens on the large chart and it becomes very easy to recognize. Rule number two says termination conditions must be false. And guys, these are those areas likely to stop the market. And termination conditions can do just that. They can stop the market. They can, excuse me, they can create a bounce, excuse me, that's untradeable. But the idea is that these termination conditions are where the market reacts. And I took a picture this morning and I posted it in there of NASDAQ. Fib to 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 fib. Guys, these are where decisions are happening. This is where the buyers couldn't make a key area to make the decision, and the sellers fought back. And you see this happen all day long, and there's probably opportunities between them, but fibs are where decisions are made, and the easiest trades happen in between these areas. So we're going to identify and embrace the idea of a clear path. And a clear path is pretty simple. It's a two-part process. And we're using Fibonacci resistance for the example. If price reaches an area, meaning that your dynamic Renko bars reach an area, and none of the triggers break the area, all of the triggers remain below resistance, you've reached an area that may stop the market. And you don't know whether it's going to stop the market, whether it's going to create a bounce, or whether it's going to break. You have absolutely no idea. But what you do know is that somebody with a lot more money than you is probably going to make a decision at that line. And if you go back to the ES, price reached Fibonacci resistance and none of the triggers broke through. And guys, this is what reversed the market. This is what Nexgen users can identify hours in advance. And there's a simple recipe to make sure that you never get caught out going long into an area that's about to make the market go short. So going back to it, if price reaches the area and the triggers don't break it, I want you to sit on your hands. I want you to relax. I want you to let the market sort itself out. And then if the area breaks, and guys, areas break all the time. If they didn't, we'd be caught between two fibs forever. If the area breaks, meaning that both your small triggers and your large triggers get to the other side of the area in question, now the area is broken, and now the path is clear. And guys, for the first run with the Nexgen software, I really do want you to keep it this simple. I want you to keep it so easy that if price reaches an area, none of the triggers break through it. Not price breaking through it, price reaches, where are my triggers? That's the recipe. If price reaches and both of the triggers get through, guys, now we have a clear path. Resistance begins to act as support. Support has all the triggers above it, and there's one of those potential tails with the odds favorable momentum. This is the most basic approach to termination conditions, to identifying these areas. And it requires a little bit of patience. It'll be much easier to see it after the fact than in the moment until you get some reps. So price reaches, where are my triggers? Ask yourself every time, where are my triggers? If all of the triggers are below the area, don't take a trade. Sit on your hands. Let's see what happens. If both your small and large break the area is broken, the path is clear, rule number 2 is met. Let's look for that high probability trend trade. There's a third scenario, and this is why I told you guys about medium probability trades. Medium probability trades means that an issue exists. This is going to be most everybody's first medium probability trade, and it's what we call a 50-50 trade. And a 50-50 trade means that 50% of your trigger lines, the small triggers, have broken through the area. They've gotten above Fibonacci resistance. But 50% of your trigger lines have remained below. So 50 above, 50 below has nothing to do with your chances of survival or winning the trade. You could call it a straddle trade. You could call it a one above, one below trade. It doesn't really matter. But what it means is that when I have odds favorable momentum, and this is the key to the 50-50 look, that this area has the potential to break. But small and large haven't made it through, therefore it is not broken and the path isn't clear, which means that the second advantage is not present. We've identified our small issue, which means it's imperative that we don't sacrifice momentum or an entry area when we're getting into these 50-50 trades. And you can even see it right here. The momentum has the potential to break, but ultimately it holds. And here, the momentum gives it the potential to break, and in this case it does. I'm going to give you a set of rules to give you a better chance of taking these trades with a little more precision and a higher probability of win. So, is everybody comfortable with the idea? Price reaches, where are my triggers? Price reached Fibonacci support. All of the triggers remained above. Guys, look at the bounce that it creates. And I like to do this just to build trust. Look at how Fibonacci support held 1, 2, 3 times until the market made it to where it was trying to make it here. And once the buyers hit their area, they said, all right, let's take profits, and the sellers took over all the way to the next key area. Next-gen users are going to look for their opportunities there. Weakened triggers at an area is a good indication that that might be a little bit of overrun. Sometimes it just retraces right back to resistance. All the triggers remain below, and the market continues in the direction it was going. Sometimes it breaks in the middle of the night, and it still reverses. So guys, you're going to see it over and over. Scroll back and take pictures, right? Go back and take pictures of termination conditions and write that recipe on your chart. Price reached this area, none of my triggers broke. And then you'll be able to go to the section here, and you know what I didn't do? Let's talk about which areas may reverse the market, which areas can stop it cold. And this is a great roadmap if you're brand new and you're looking at your charts. These are the areas that may stop the market, that may create a reversal, that may give you a disadvantageous bounce. Magenta divergence high lines and cyan divergence low lines. These lines represent a very specific spot in the market where either the buyers had their momentum stolen by the sellers and it creates this pink line, or where the sellers had their momentum stolen by the buyers, and it creates the cyan line. These lines on themselves are not termination conditions. Remember the recipe, price must reach them, and then we ask where the triggers are. We're also looking for red Fibonacci resistance and blue Fibonacci support, as well as these yellow 1-to-1s. But the recipe never changes. First, your dynamic Renko bars reach the area, in this case, Fibonacci support. All you have to do is ask yourself, where are the triggers? They remain above support. This looks just like the S&P right now, doesn't it? Because they remain above support, all you have to do is sit on your hands for a minute. Be a little bit patient. It's either going to break, or it's going to reverse the market, or it's going to create an hour's worth of indecision as they fight it out. But you never have to get caught in it. Smalls and large gets below support, and now it behaves as resistance with odds favorable momentum. And there's one of those tails. And sure enough, that momentum and clear path pushes all the way down to Fibonacci support. Guys, give me a Y in the room if you're with me on the recipe. Price reaches this divergence low line. That's the first part. Where are my triggers? They all remain above. Guys, this termination is called a pivot stop out of a prior divergence line condition. A pivot stop out can be a very powerful termination condition, and it's the same recipe. Here, the buyers stole momentum from the sellers, not a termination, just a loss of momentum. But when price returns and reaches it, the triggers remain above. Now we have a termination condition, pivot stop out. This pivot stop out creates a full reversal in the market. We're going to call it a strong bottom. A strong bottom is a key part to taking those medium probability trades. So a termination that creates a full reversal in the market is what we're going to call a strong top or a strong bottom. This picture reminds you that 90% of your day is reading indicators, 10% of your day is taking advantage of them. Let's just go through it quickly. Price reaches Fibonacci resistance. Where are my triggers? They're below. I'm not going long. It really is that simple. Price pushes, all the way back to Fibonacci support. Where are my triggers? They remain above. There's that stop. I'm not going short into support that has told me that it may reverse the market. 90% of what I'm doing is waiting for advantages. I love this one. From support, this is that fight between buyers and sellers. Price reaches resistance. No triggers break through. There's a termination condition. Price reaches that divergence high. Now I have a pivot stop out of a divergence high. Also a termination condition. Price reaches the second level of Fibonacci resistance and none of the triggers break. And once again, it's a termination condition. When it creates that full reversal and gives me odds favorable momentum with a clear path, guys, there's your entry for the absolute highest probability, best of the best, typically wins 70 to 80% of the time trade. A high probability trend trade that happens after a termination condition, guys, that's your best of the best. But look at how much patience it took to get to the winner that ran you all the way down. So this is the idea, guys, is 90% of what you're doing is just reading indicators. 10% of what you're doing is taking trades when they set up after. Because I didn't have the information to enter at the fib line, David. Because if I enter just at a fib, all willy-nilly, I'm hoping that that area breaks. Does that make sense? It did, didn't it? It bounced all the way down here, right into Fibonacci support. David, you don't have to catch every move to be successful in the market. The idea is that we wait for the advantages to come together. We wait for odds favorable momentum. Here my triggers are flat, not wide. I never got odds favorable momentum. I just got to push down to support. But coming off the second hit, then my triggers are wide. Then the space is there. Then there's a potential entry. Were these getting broken? Because they look like they held like solid rocks, both direction. Oh, I'm sorry, Em, you're talking about your chart. No problem. So, Manpreeta, do me a favor. Take that same picture and write rules on the chart. Tell me what you see. Will you do that for me? Because if I look at this, all I'm doing is guessing. I don't know what you're looking at. I don't even know what part of the market you're looking at, right? But what I do see is areas with the potential to break but never really broke, which means that you never really had a high probability setup, which goes back to that whole idea that we have to sit on our hands sometimes. We have to wait for the best of the best because, guys, your money is worth it. This is an investment, right? This is a job. And the goal of the job is to make money. So even with odds favorable momentum, if we hit the area, and David, I think this may answer your question a little bit. Let me take a picture of the picture. I'm a big fan of arrows to talk about what the market's doing. Um, the market's coming down, and it's coming down with odds favorable momentum. And at the time it hits one-to-ones, I'm asking myself, where are my trigger lines? Right? That's the recipe for a termination condition. Well, once I hit the trigger line, or once I hit here and the triggers remain above, I know that I'm not going short anymore, right? But David, it's still a little too soon to go long because I do have a lot of momentum against the trade. And my triggers are down and my trend is down. And look what happens. Right off that key area, the buyers push it up into Fibonacci resistance, but all the trigger lines remain below. We get into this indecision fight. And then the sellers push back. And then the buyers try again. And then the sellers push back. And then the buyers try again. And then the sellers push back. And the whole idea with your advantages, ladies and gentlemen, is to stay out of this fight. You don't have to get in here. You don't have to be first. And you don't have to hope that the market's doing something. You can read your indicators and say that the market is doing something. I don't have to hope about it. So David, what I'm saying is even though the termination condition is all the way back here, your highest probability trade happens after the fight ends. When the small and the large get above that area of resistance, it begins to act as support, and then I have the momentum to carry this trade all the way up to Fibonacci support. And the cool thing is this is about a $450 move. And if you can avoid losing $1,000 in the indecision and just capitalize on the best of the best, the easy moves. Oh, I know. Okay, so let me play the other side of devil's advocate. I love that, and I love that you're doing this. I really do. So, David, if I had gone long at this blue line, I get the ever-loving crap kicked out of me, right? And if I go long here, I lose. And if I go long at this blue line, I lose. And at this blue line, and at these one-to-ones, and at this blue line, and at this red line. Do you see where I'm going with this? Yeah, waiting for the reaction. David, I love your line of thinking. I really do. Question everything, man. Um, but the idea, this blue line was just as likely to hold as this blue line. It already had 3 times. And this is why we wait just a little bit. We wait for that confirmation. And thank you for posting that because really, I see a lot of people trying to get in right here and getting run over and getting run over and getting run over. And guys, there's just indications that things are changing. And if you wait just a little bit and embrace it, it really can be easy. And that's that patience piece, David. And I'll tell you right now, that was my weakest link in my trading plan, was simply waiting for it to be the best of the best. And that's where we get antsy, right? We're like, oh, I just want to be first. I just want to be first. But first gets run over more than it doesn't. Um, and I have a picture. David, you'll love this. I hope. I made this picture for another gentleman, and this is one of the great things about what we do. And I hope you guys can follow this. Everything is screaming up with momentum into Fibonacci resistance, right? This is where, David, where a lot of us say, I think resistance will hold. I think those yellow one-to-ones will hold. I think that this is the area for more down, right? And then it pushes a little bit, and then it comes up and stops you out, and then it pushes a little bit, and it stops you out again, and it pushes a little bit, and it stops you out again. Over here, your trigger lines have rolled. The momentum has become advantageous. And what we find a lot, David, and this was great for my own personal learning to relax, is that the price right here where you think resistance will hold is very often the price where resistance has told you that it's going to hold. So it becomes an easier trade. It becomes a higher probability trade. It becomes a trade with advantages rather than hope. Um, and I love that picture. So if it's really going to be a top or bottom, things will sort itself out and roll. Great points, though. Absolutely amazing points. So is everybody cool with the idea that if price reaches, no triggers break, let's just sit on our hands for a minute? That's termination conditions in a nutshell. Sometimes the market, somebody posted in their story. What you can do is try just reloading the template first. That may be the easiest. Is right click and reload your 13.2 template. You did that? All right. Give me a second. Let me get through this lesson. And then Snorri, if you want, you have access to Traders Chat, right? Jump over to Traders Chat real quick, and if you ask the same question, you'll probably get an answer faster than going to text. Somebody probably has a picture of it, and I think John Novak's over there too. He'll probably help. And I'm not trying to boot you out of here, but I don't know the quick answer. That'll probably get you where you want to be faster. So sometimes the market turns, right? And Manprita, we will cover entries as soon as we're done with termination conditions, and I'll show you exactly how to place the trade in. You're going to be able to predict exactly where it's likely to continue and wait for the market with an order. But first, we have to talk about one more termination condition, guys, and this happens on a smaller, faster chart. This is the only termination condition that happens on a smaller, faster chart. Because sometimes the market turns from nowhere, right? Even with odds favorable momentum and a clear path. So this is the only termination condition that I respect on a smaller chart, guys, and it's three divergences in the same location. Three losses of momentum in the same price range. When I lose momentum three times, it can stop the trend. When I lose momentum three times and the small triggers are inside of the large, remember that anything can happen look, it becomes even more powerful and is more likely to stop the trend. And then when I get three divergences and that third divergence is higher than the previous from a low or lower than the previous from a high, it becomes even more likely that it's going to stop the trend. Guys, this is what you're going to see on a small chart. From a low, from a high, and you're going to see it when your large chart may be changing direction, but because it's such a slow chart, you're not going to recognize it in the moment. So this low and this high that didn't come from Fibonacci support or resistance, your smaller chart's going to give you that indication. And this is also going to allow you to manage trades. If you are in the perfect short trade and three divergences print, it becomes a warning flag. Hey, maybe we need to get out of this trade. Let's take our profits and wait for the next opportunity. If you're in the perfect long trade, hey, there's three divergences. The market may be changing. It gives you the opportunity to preserve capital, to manage your trades. So guys, that's termination conditions. And I spend a little extra time on termination conditions really because this is the one that pulls more money out of new users' pockets than any other look. So check it out. We hit Fibonacci support. Doesn't this look just like the manual picture but different? Support is reached. The triggers hit it. Guys, look at that. There's three divergences, four divergences in the same price range. These are good just to get it back up to Fibonacci resistance where absolutely no trigger lines break through. It also corresponds with three divergences right off the top. And sure enough, here goes that market pushing down. Small triggers are through the area. The large triggers are trying to break through the area. We're getting closer to a potential trade. But we have to have all three rules met, which means that we have to have the advantage of momentum, and we do that with strong trigger lines on the large chart. That we have to have the advantage of a clear path. That's done with the areas and the trigger lines on the large chart. And now we're going to refine. We're going to refine down to the point where the market is most likely to continue. We're going to pinpoint, I don't know, David. If they do, they're fools. When there's such simple indications to give you an idea of when those areas are likely to hold or break, why would you just put all your eggs in one basket hoping that they break? Hope is a horrible plan. Why not at least have momentum, right? Get that clear path. Skip your areas, I don't care, for entry. But man, let the large chart say that the large chart is doing what it does, right? But let's talk about entries. Let's talk about your best chance of success with entries, guys. When the rules are met on the large chart, when the momentum is there, when the path is clear, this should be your look on the small chart. Your small chart in an uptrend should be green. Your small chart should have strong trigger lines. You should have what we call favorable large triggers. And favorable large triggers on a smaller, faster chart mean that the large triggers, those smooth large triggers, and your synthetic triggers, which are just large triggers from the large chart, we've put them onto your small chart because when they overlap one another, when they are one on top of the other, guys, we're going to call this favorable large triggers. They're favorable because they are going to create your smallest window of opportunity, the smallest point for entry. And this smallest point for entry allows you to reduce risk. So when we're looking for the trade, we're going to look for a couple things on the small chart. We're going to make sure that everything is up, that we're not fighting the overall trend. We're going to make sure that the momentum is present, that the smalls are outside of the large triggers. We're going to look at these large triggers coming up, overlapped one on top of the other, and we're going to look for the areas that may fall within them. High probability trend trades always originate at lines. And those lines are areas, lines. They're synonymous. It can be fibs, it can be a mid-band, or it can be yellow one-to-ones. Snorri, did you get an answer over there? It's on my brain, I have to ask. I hope you did. Fibs, mid-bands, yellow one-to-ones, large chart indicators, reversal bar marker, make sure that it says true. Show reversals as true in your indicators from the T3 Fibs Pro Trader. This is on 7, so it may be a different look. But that should get you where you need to be. Show reversal price, show reversal. Both of those are true. That should get you where you need to be. If it doesn't, try building a new chart with the template and see if that helps. Guys, this is the look on your 5-1 when you make the decision that it's time to take a trade. Everything says up. Everything is strong. The large crowd is pushing. The momentum is there. It's fierce. The path is clear. There's nothing to create a bounce. Guys, this is where the yahoos come in. This is where the small crowd fights, right? This is where the people that want to take profits, or the people that want it to go the other way, the people that aren't smart enough to not fight momentum and trend, jump in and give us a pushback, guys. Rule number 3 says that we're going to use a limit order. So, Manpreet, we enter on a limit order, which means that we're literally going to wait for the market to come back to us. When everything says up, we're going to let the market come down. And with a little bit of practice, a little bit of study, a lot of repetition, you guys are going to pinpoint where the market is most likely to continue and create a window of opportunity. But first, we need the small crowd to give us a push, and that begins with the reversal bar. At the time of the reversal bar, I want you to identify the areas that are falling inside of these favorable large triggers that are coming up like a shark about to breach. Fibs, mid-bands, yellow one-to-ones. Guys, if they're a tick or two above, they're going to get swallowed. So we're looking from this mid-band to these yellow one-to-ones. The pullback has begun, that tiny retracement in price counter to the underlying trend. Manpreet, you are going to right-click on your chart and you're going to activate a limit order right at that highest point of support, closest to the price. Because this is where the market is most likely to continue. And guys, at this point, you have exhausted everything that you're in control of. Because you are in control of your rules being met. You're in control of identifying odds favorable momentum. You're in control of identifying a clear path. And now when this reversal bar prints, you can even take a shape tool. You're looking from the highest point of your trigger lines to the lowest point of your trigger lines, but this isn't where the market is likely to continue. The market is likely to continue somewhere between the highest point of support to the lowest point of support inside of favorable large triggers, which means that if it is a short trade from the lowest point of resistance to the highest point of resistance inside of favorable large triggers, and guys, when you annotate your charts, when you go through and you take a trade and you annotate your charts, I want you to use this phrase because, guys, this is going to help you with entries. Entered at the mid band inside of favorable large triggers. And that mid band may be fib, it may be yellow 1 to 1, but this is the language that I want you to use every time you take a trade. And draw an arrow. This is where the market is most likely to continue. I'm going to enter at the area inside of favorable large triggers. So let's talk about the area. It's the black box from the highest point of support to the lowest point of support. So we're done being in control, guys. The sellers are pushing and they reach the area and you're now in a trade, guys. You're in a trade with the advantage of momentum, a clear path, and having entered where the market is most likely to continue. This entry point, news in 30 seconds, thanks Tony. This entry point should be your first 20 days with Nexgen. You guys want to see what the market does in news? Here's the S&P. Odds favorable, clear path. If I get a reversal bar, I'm identifying the areas inside of favorable large triggers. Pretty cool, but I'm not trading into news because that's a bad idea. Look at where it's at. You can see them speeding up. You can see them starting to jockey for position. 10 a.m. Let's see if they do anything. They may not. A lot of duds today. Let's see. That was resistance inside of favorable large triggers, but it is a news release. We'll come back and see what happened to it. Sure looks like a high probability trend trade. Potentially. Guys, your first 20 days. First 20 days, focus on entries. But Mark, if all I'm worried about is entries, how am I going to make money? You're going to make money based off of your great entries, guys. This is the point where the market is most likely to continue. This is the best of the best spot. This is the window where we expect to bounce. Why do we call it a window? Because every time it pulls to the mid band, we're going to get in because of all the momentum, because of the clear path. Guys, there's nothing in the way to bounce this market. But I want you to expect and be prepared that it may go to the bottom of that window, that it may push down and reach those yellow 1-to-1s, that lowest point of support inside. You're going to watch your P&L go against you. You're going to panic a little bit and say, oh my gosh, I'm going to lose, I'm going to lose. As long as you're in the window, guys, your rules are still met, your advantages are still placed or in place. Because of this methodology, because we can identify the window where the market is most likely to continue, and guys, you're gonna go back and take these pictures and build this trust. We can also identify where the market shouldn't go if the trade is going to work. And that's beyond the window of opportunity. So I'm going to put a protective stop, typically 4 or 5 ticks, beyond that window of opportunity. And if the market pushes all the way down outside of where it's most likely to continue, it's going to run smack dab into a protective stop, guys. Great entries manage risk. They keep it as minimal as possible. And anything that wins 70 to 80% of the time, guys, it has to lose 20 to 30% of the time. There's just no way around that. Which means if you take 10 trades, you're likely to lose 3 of them. And you don't get to pick which 3. So you have to develop the trust in the methodology so that you never hesitate. So you always take the correct entry. So it's always a manageable trade. And guys, this is your first 20 days with Nexgen. This is exactly what we're looking for 20 days to get into the market at the best of the best spot. Remember we talked about those tails on the large chart, right? We talked about the tails and how we enter not at the bottom of the tail, but we pinpoint exactly where the bottom of the tail is most likely to form. And that's your area of support inside of favorable large triggers. We're not waiting for the tail to form because the market's all the way up here. We're waiting for that one reversal bar. And at the time of the reversal bar, we're identifying from our highest point of support to our lowest point of support inside of favorable large triggers. And this becomes your high probability trend trade. Couple things people worry about. This pullback starts right here. But Mark, I've only got 8 ticks to get to that termination condition. I've only got 8 ticks, Mark. I can't take that trade. The risk reward absolutely sucks. Guys, this is another great part about the methodology. We're not trading from the top of the bar. We're trading from what should be the bottom of the bar, that area of support inside of favorable large triggers. And suddenly, your 8 ticks becomes 28 ticks of profit potential. If your small chart, small triggers turn against you, don't panic. That little loss of momentum is probably what's getting you to the best of the best area. If you have one-to-ones on your small chart, don't panic. Areas are defined on the large chart. So your first 20 days is developing trust, guys. Developing just faith in the idea that it only takes 2 charts and 1 chart defines direction, momentum, and areas, that you can refine all the way back onto a smaller, faster chart. And with a little bit of study and practice, guys, you can identify exactly where the market is likely to continue. You guys want to do it together? Let's go through. And this one wasn't the easiest best look, so we'll talk about it all the way through. But let's start with smalls below the large, right? We're in a downtrend. The momentum is great. Smalls accelerating away from the large. Brand new users, give me a Y if you see it. This is the first thing I'm looking for. We're going to go through a chart read exactly as I go through a chart read when I'm looking for my own personal trades, guys. Do I have odds favorable momentum? This is the key. This gets everything in motion. Manpreet says yes. Whoops. Manpreet, I'm inclined to agree. Thank you for playing along. I'll be excited when you hit your goals. Has price reached an area? The bottom of the bar. Have we bumped into a fib, into yellow one-to-ones? Is there a divergence low here, guys? Or do I have room to my potential target? Is rule number 2 met? And if you're not sure, I need you to say, Mark, I'm just not sure. Nobody? Cool. Rule number 2 is met. I haven't reached anything. All of my trigger lines are below support. They're behaving as resistance. And my large chart is, or my small chart is cranking down. And there's my first reversal bar, guys. I want you to look at the trigger lines. My large are all the way down here. And my synthetics are all the way down here. That's okay. So David, I started on the large chart. Let's just only keep the large chart. I have momentum. Do you see it? Remember, large chart always leads the way. Guys, you can keep, it's a blank screen. Let me reboot it. Elinsky, did that bring it back? You guys see my pointer? Sorry. Okay. Smalls are below the large. This gets everything going. So, David, do you see where we at right? This is the large chart. This is your 13.2 on the S&P. Small triggers below the large triggers are wide. Guys, I love this look. This look lets me know that the odds are favorable for the market to continue. So let's start at the bottom of the bar. And here's the key, guys. There's nothing there, right? It's just space. Blue Fibonacci support is all the way down here. There's no yellow one-to-ones. There's no divergence lows. So I haven't reached an area. So I'm not trading into an area likely to create a reaction. I've also gotten both small and large triggers below support, which means that this area is broken. I have a 100% clear path. Guys, give me a Y in the room if you're with me. This is a very important concept. I love this one. So here's the wonderful part. The large chart says momentum. The large chart says clear path. Now, I have to turn my attention to the small chart. This is where we refine. Problem solved. Awesome, Snorri. Guys, this is where we refine the entry. This is where we define where the market is most likely to continue. And I want you to see something. Here's my synthetic triggers all the way down here. Here's my large triggers all the way up there. Brand new users, when those triggers come together, you get the least amount of risk. That's your best of the best look. So let's go through the process though. Market pushes down. And there's a reversal bar. And that reversal bar takes you right to Fibonacci resistance inside of your synthetic triggers. I want you guys to see this. From 44.50 to 46.95, and then to a stop outside of the window of opportunity. Are you guys comfortable with 6 points on the S&P risk? That's a question only you can answer. Me personally, in my own trading, I don't care to put 6 points risk on any trade. That's excessive. That's $300. Well, potentially to the fib, David. And then we get another reversal bar, and now things starting to tighten up, right? Now we're starting to get this look, and we can create the window of opportunity. Now the triggers are getting closer. Look at the difference, though. Really tightens up, 1.5, where the market is likely to continue. If you activated a limit order here, below the area of resistance, you could get into the market. It hits it, and then it heads back down, and it does it quickly, right? David. So, David, fear is a byproduct of uncertainty. Would you agree? If you walk into a pitch black room, even if it's your room, fear is a byproduct of uncertainty. How do we create certainty? You create certainty through repetition. When you get to the point where you see something so many times. And guys, this is the biggest challenge that new users present me. Mark, I've been doing this for 2 weeks, and I'm not a professional day trader. Mark, I've been doing this for 30 days, and I am not so good at this that I'm on track to make $1 million this year. It's not realistic. Repetition, experience is the only thing that I can't give you. Guys, at this point, if you enter the market below resistance, there's your stop, right? This is one of those ones where the market starts to go, and then it comes back again. And look how many times. 1, 2, 3, it tests the area. 3 times. With odds favorable momentum and a clear path, it tests the area. That's that indecision near fibs. And then the market cranks down. The idea, David, PFI, Manpreet, Sydney, Ace J, Dwight, Gio, Farzan, Bobby, Ron, Joel, the idea is that if you can develop the trust that odds favorable momentum and a clear path gives you the best chance of success to get down to that next area, then you can develop the trust to enter the market, put your stop where the market shouldn't go, and take advantage. You're not going to do it on day one. You're not going to do it on day two, guys. You have to go through the process of practice. You want to see the easiest way to develop trust? I'll show you right now. Scroll back and look for your rules to be met. Look for odds favorable and a clear path. And if you see a tail, circle it. And scroll back on your smaller, faster chart and ask yourself, did this fit the rules for an entry? The answer is no. It didn't make it to resistance inside of favorable large triggers. That's not my trade. Here, price reached a divergence low. None of the triggers are broken. That's not my trade. Here's one of those potentials to break. Odds favorable momentum into an area. Smalls are through, large are not. Momentum is overwhelming. And I'll be damned, it comes right back to support inside of favorable large triggers and finishes the move up to support. This is where Nexgen users can make money. This is where the rest of the people get run over in indecision. So we're developing trust. Here we go again. Everything begins with momentum. The smalls are through, the large are almost through, so it has the potential to break. What's it look like? Great googly moogly. It's an area of support inside of favorable large triggers. Guys, this happens every day. Let me show you how it's going to work for you as a brand new user. And I'll use this picture as an example. The first thing you're going to do is you're going to say divergence printed, I can't take the trade. And you're going to post this picture in class and you're going to say, but Mark, divergence printed, I can't take the trade. And then you and I are going to have a quick little lesson. And this is exactly how it works, guys. And I'm going to say, hey, Alinsky, remember that the large chart defines direction, momentum, and areas. The large chart told us that it's okay to look for an entry. One divergence on a small chart isn't a termination condition. This gave us exactly what we needed to push back. That's the first thing that you guys are probably going to do as a brand new user, is you're going to start questioning everything because the trust isn't there. The next thing you're going to do is you're going to show me an entry right here before the pullback. Why? You guys all know the answer, right? We've already talked about it. The fear of missing out is going to have you jumping in right here, which creates an unmanageable trade, right? We're trading patterns that create advantages. And guys, this is okay. I want you to take this trade and I want you to post it in the room. And then you're going to show me an entry probably somewhere over here. Well, Mark, I figured that I was jumping in early and I'm still a little indecisive about my entry, so I'm just waiting for it to go in the direction of the trade. And I'm going to say, that's cool, right? It's doing everything, but look at how much risk you put on that trade because you entered so far away from the area. That's typically your next entry. Do I sound like I've gone through this once or twice with you guys? So this entry, the first one, is fear of missing out. This one is I don't trust my rules yet. And I just need reps, right? And then you guys are going to show me this entry right here. Because you said, all right, I've seen it 50 times, and now I trust it. Gosh, where is the right one? Here we go. And this becomes your rules-based entry, right at the highest point of support. And then, guys, this is your journey isn't over yet. And then you're going to show me the picture where you got stopped out right here. Has anyone else besides me done this? Where you get stopped out right at the area of support inside of favorable large triggers because it was 4 ticks against you and you didn't want to lose money that day? Anybody other than me? And then it goes back to trust. Guys, I've done this 100 times. I'm not proud of it, but I've done it. You're going to do it too. Be okay with it. But if you post the trade in the room, we're going to talk about it and we're going to work through that problem. And guys, eventually, you wait for the pullback to the area inside of favorable large triggers. Because of the advantages, you're willing to put risk on the trade. Because you had the advantages, the trade does everything it's supposed to do. your ability to reduce risk below a reversal bar. And guys, this is when, through a very simple trade, you start realizing your financial goals. The thing that everybody hates is that this doesn't happen on day one, guys. It takes a little time. So Manpreet, how do we enter the trade? We enter the trade on the pullback. We wait for it with a limit order. I right click on the chart. Whoops, well, the market's trading below me, so I can't do it here. I literally right click on the chart and I will wait for the market to come back to me. But what are we looking at right here? Price reach support. None of the trigger lines are broken. Guys, that's a textbook termination condition. What's happening on crude oil? It has the potential to break, doesn't it? I don't know what that is. I think I've got one of John's crazy things on here. Guys, I did completely wipe out and rebuild my charts. But let's start at the beginning. Termination creates a full reversal. It's a strong top. Full reversal gives me odds favorable momentum. I love it. Odds favorable momentum gives me a look where this area has the potential to break because of the momentum. So I look at my small chart and I'm waiting for a reversal bar. And if I get a reversal bar, guys, this is how quickly you can do it. From my lowest point of resistance to my highest point of resistance inside of favorable large triggers is this box right here. Give me a Y if you're with me. Termination creates a full reversal. Full reversal gives me odds favorable momentum. What's my problem, guys? This isn't a high probability trend trade because 89.40 is not broken because my large triggers are still above it, which means that even though this is the area where it's most likely to continue, because this area is not broken yet, I'm going to insist that my small chart is perfect. I'm going to insist that I don't have divergence. I'm going to insist that I have strong triggers. I'm going to insist that my window of opportunity is its absolute smallest so I don't have to put a lot of risk on the trade. There's your reversal bar, divergence prints. For me, that means no trade. But it's still, if it's going to break, that's still the point where it's going to do it. But I have to have a set of rules. What's it going to take to get me into the trade, guys? And I've done that, and I'm giving it to you guys with this KISS trading plan. This easiest, most basic plan. And it revolves around you having taken time to learn the high probability trend trade. So I'm also going to give you a high probability trend trade checklist. How to police yourself every time you take a trade. What rules to write every time you take a trade. The advantages are in place. I've never had anybody follow this checklist and do worse than 70%. Has anybody in this room ever done it for like 3 or 4 days and you're winning 70 to 80% and then you decide that you're too smart for it and break away from it? I've done it. My desire to be busy overwhelms my desire to be correct every now and then. You're all going to do it. Guys, it's a normal part of the path. You're not special. Everybody does it, right? So guys, here's your checklist. Police yourself. For those of you that are brand new, Manpreet, David, did you look at these this morning and remind yourself what a termination condition that creates a full reversal looks like? Did you remind yourself what odds favorable momentum looks like? If you're brand new, guys, this is going to create huge advantages for you. Did you review through your brain what a termination looks like? And then did you take a second and study that window of opportunity? That's okay. It's okay to not be confident yet. I wouldn't expect you to be, David. I hope you don't expect you to be. But can't we break it down into individual pieces? Can't we begin with momentum and let this be the first part, being able to recognize it? And these charts become more difficult to read the more options you give yourself, right? The more you try to make sense of everything, the more difficult it becomes. Guys, my rule said don't take a 50-50 trade if divergence prints. My rules just kept me out of a loser, didn't it? Guys, these are the same rules that I'm handing to you right now with the KISS plan, with this Keep It Simple Sunshine plan. And this plan's a stepping stone. It's giving you something to look for as a brand new user, guys. It's a stepping stone in your learning journey. It's designed to optimize your chances of success with a high probability trend trade or a 50-50 trade as a new user. Guys, this plan is your best of the best. This is keeping you focused on advantages. But through your simulation, study, class feedback, and continuous practice, you're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. And you're going to see that come into fruition, guys, when I click on one of Ron's trades. You're going to say, wait a minute, that's not a high probability trend trade. Well, Ron crafted a plan tailored to his needs. Tony the Tiger crafted a plan tailored to his needs. Alan has crafted a plan tailored to his needs through their study, simulation, class feedback, and continuous practice. This plan is not the end of the road for you. This is the beginning of your trading career. And the simple plan for consistency starts with never fight large chart direction or triggers. Guys, just don't do it. There's no reason. And then, David, this is going to keep you from trying to be first a lot. And let me say it to the guy that probably needs it the most. Mark Novak, this is going to keep you from trying to be first a lot. Because, man, I love to be first. And it took so much money out of my trading account. So eventually I got so tired of losing that I started following my rules. And guys, all I did for 20 days, all you need to do for 20 days is define your entries. Get into the market at the right spot. Because when you get into the market at the right spot, it creates manageable trades, guys. It makes your trading career so much easier. Once you get in, you're going to have to manage it. So the same way a mechanical entry is the best case scenario for new users, so is a mechanical plan for management. High probability trading won't make you a race car driver. It will show you how to stay on the road. Absolutely. It's your seatbelt, guys. It's your crash helmet. It's you're not jumping off the cliff hoping the water's deep enough. It's making sure that it's deep enough before you take the jump. And it all begins with a great entry right there at resistance inside of favorable large triggers. So if you spend 20 days being able to get in at the best of the best spot, guys, your risk is predetermined outside the window. You know exactly where to put a stop. And at this point, John P., I may have jumped off those cliffs once or twice. But isn't that it? Instead of hoping that the water's deep enough, doesn't it make sense to go down and make sure? Trading is very much like that, guys. Your indicators and your rules are making sure the water's deep enough for you to take the plunge, for you to take the entry. Your risk is defined. We manage risk before reward. It's outside of the window of opportunity. And at this point, there's nothing for you to do anymore. It's either going to hit your stop or it's not. If it hits your stop, you take a small loser. That's okay. It's a normal part of a positive equity curve. Or it's going to give you a reversal bar in the direction of the trade. And if it does, the only thing for you to do is to reduce your risk above the reversal bar. Guys, we're managing our risk before we ever manage profits. So now it's either going to hit that stop, you take a small loser, or it hits your first target. And this first target aggravates people that like home runs. It's only $100. I can tell you from my trading yesterday that hitting a $100 target 5 times reaches your goals for the day. That's exactly what happened to me yesterday. I took $100. I reduced my risk. I managed my trades, guys. This $100 creates a euphoria. You're happy. There's confidence through the memory of success. You can't believe it. Somebody just handed you a $100 bill. And then you're going to move your stop to break even, and now you have no risk on a trade. So not only do you have that $100 bill in your pocket, but you're not risking anything, guys. And that is the secret to trusting the large chart, to trusting the momentum, to trusting the direction and the clear path. Because once you get paid and you go break even, remember that the large chart was screaming down. The large chart had nothing in the way. It makes it easier for you to sit on your hands and wait for the second target. And your second target as a brand new user is only $200. You're going to have an awful lot of trades that get stopped out break even. I want you to be okay with that. But through study, repetition, practice, and feedback, you're going to change your management plan. And guys, I'm telling you right now, if you hit $200, that's a $300 trade on 2 contracts. That's $300. It's a $1,500 week, guys. It's a $6,000 month, and it's a $72,000 year based on the highest probability trend trade you could take and only taking one full winner a day. What happens when that 2 lot's a 4 lot, guys? What happens when that 4 lot becomes an 8 lot? We're not looking for more trades. We're looking for better trades. We're looking for the best trades. We're looking for the highest chance of success every time we enter the market because our money's worth it. And guys, that's your high probability trend trade. That's your best of the best. 50-50 with divergence said don't take that trade. So let's go through it. Let's read it. What do we see? I see small triggers through a divergence high. I see large triggers behind them. I have odds favorable momentum, but I don't have a clear path. I have areas with the potential to break. Give me a Y if you see it. All we're doing is we're reading it in the moment. I have areas with the potential to break. Guys, I do not have a clear path. But the further we get from the problems, the more we like it. Now, I'm waiting for a reversal bar, right? And from my highest point of support to my lowest point of support really is right there. This becomes the area where the market is most likely to continue. This becomes the area where if I'm looking for a 50-50 trade, I'm putting my order right about there, and I'm understanding that I don't have a clear path. I'm understanding that this divergence high is not broken, but it has the potential to break. These 1-to-1s are above my large triggers. It may go from there, but I'm not willing to put $300 worth of risk, hoping that an area breaks. And sure enough, there it goes. And we'll see what happens. But guys, that's the process each and every time. Whoops. Let me delete that. So let's go to the next chart. Odds favorable momentum directly into a termination condition that no triggers, right? No more long trades. Can we see if we missed something? Maybe. Maybe not. Those smalls might not have been through. There's your S&P. Weak triggers at a fib never made it. All I do is talk about advantages, guys, over and over. Do I have the advantage of momentum? Do I have the advantage of a clear path? If I don't have one of those advantages, do I have enough advantages to warrant taking a medium probability trade? Rinse and repeat, guys, 30 days. 30 days. Study. And here's the best part. So for those of you that are new and maybe working on reading the charts, I want you to do this. I want you to take a chart, take a picture, just like this. You're not taking a trade. You're not putting that pressure of taking a trade on you. And I want you to start doing this. The first thing that you have to be able to identify is the trend. So type uptrend, or even more, remind yourself why it's an uptrend, and just type it on the chart. Then I want you to take an arrow and I want you to identify what your trigger lines are doing. These are strong triggers. Rule 1 is met, right? So we're not taking a trade. All we're doing is we're breaking apart. And then you can even do this one. Because it doesn't always have to be in the moment. All we're doing is becoming chart readers. Those are weak. See the difference? And I want you to do this. Area not broken, large still below. Has potential to break. Guys, I have zero pressure of a trade right now. Zero pressure of a trade. Can everybody do this? If you're working on your chart reads, can you take a picture and annotate it? Tell me what you see. Because here's the amazing thing, is you're going to take that picture and you're going to drop it in the room. And when you drop this picture in the room, I'm going to open it. And I'm going to say, let's see what you have going on. And you're going to say strong triggers and weak triggers, up background, area not broken. And I'm going to be like, oh my gosh, what a great chart read. And then you may say, was this a long? Right? How many times do you look at a chart and wonder, did I miss something? Was there a long trade there? And then this question turns into, well, let's take a look at it. This fib is this fib, and all the triggers were beneath it. And your large triggers were flat, right? And this area is not inside of favorable large triggers because these triggers are still down. And what this does is this says to you, hey, you didn't miss anything. You didn't miss an opportunity because your best opportunity, this is the conversation we'll have, is going to come from up in this range up here. And then sure enough, those one-to-ones pushed it all the way up. But guys, this is the part I need you to embrace. If you say to yourself, I'm struggling to read the charts, watch this. This becomes an opportunity to label what you see. And then after you've labeled it, go like that. And then this becomes an opportunity to be a chart reader. What are the different concepts of the high probability trend trade that I can recognize? Weak triggers, strong triggers, right? Termination, area broken. Odds favorable, clear path. Trend trade probably didn't work, but maybe that one did. Support holds to the tick. All of these concepts you can begin to go through and do. Guys, embrace the idea that you can be a chart reader without having to take a trade yet. Oops, and I just closed out my crude oil chart, which is kind of a silly thing to do. If you ever close out a chart and you didn't mean to, you X out, do this. Go File, Workspaces, and close it. Whoops. This is the cheat code, guys. Workspace, close the workspace. Do not save it. Because what it's going to do is it's going to forget that you deleted that out if you do that. So I went a little long-winded this morning. I really did, but I think that we got some good lessons in there. Is everybody comfortable with the idea that a rules-based entry is your best chance of success in the beginning, guys? That you can keep it simple. You don't have to catch all the trades to make money. And if you're not a great chart reader yet, it's okay. Guys, I sucked at reading charts for a long time. So take the pressure off of yourself of being great at this in the beginning. Absolutely, David. No problem, Manpreet. Have a great day. And David, I think that we could say without question that you can identify the trend, wouldn't you? And I think I'm going to do this every day with you guys. And I feel like it's green. Are you colorblind? And I don't say that to be a smartass, because I really did have someone who was. And we went through how this changes. PFI, take care. Large chart trend, that's the only trend that matters, right, David? See, what you just typed in the room is very telling. Large chart trend is the only one that matters. Large chart momentum is the momentum that matters. Large chart areas are the areas that matter. And that's one of the hard parts is remembering. Nope, I'm talking about the overall trend of the market. Which way is it going? It keeps you focused on trading that direction, right? Allowing the large chart to lead the way, letting the large chart tell you if it's time to look for a trade. I have odds favorable momentum in an uptrend. That's how quickly that happens. I can't have odds favorable momentum because my large are still up and my small are down. Only worried about on the large chart, which means that there's nothing for me to do here. I've reached resistance and none of the triggers have broken through, which means that there's absolutely nothing for me to do here. And guys, that's it. If you take a long from right here, you're fighting termination conditions. So we go through this every time, always starting here. If I have odds favorable and a clear path, then I look right. And if I don't, I never need this chart. So we just take the noise off. And then I did this the other day too, and I like it. Just an example on the large chart. No, it just means weak triggers, David. So I don't want you to give it any more power than it deserves. It just means weak triggers. It means that you don't have odds favorable momentum. Is that fair? Weak triggers doesn't mean a reversal. And this is where the language comes in, and it really makes a difference, right? Blue fib means the market's going to go up. No, it doesn't. It means that I'm not going short. Strong triggers means the market's going down, not necessarily if it's into a termination. So what we do is we keep it as basic as we possibly can. One advantage on its own does not a trade make. Ooh, that sounded clever, didn't it? Just one advantage doesn't mean a trade, right? Because I have odds favorable, but I don't have a clear path. And this is what I wanted to do on this one, is I'm going to bring it. Let's get rid of a lot of noise. What direction is this market going right now, guys? This is the S&P. It's going up. Do I have odds favorable momentum? Small's above the large and the large wide and angled? Hell yeah, I do. Do I have a clear path? No. You're done, guys. Your rules aren't met for a trade. And is that easier like that without all the noise? So David, this is literally, so what you're going to do is you're going to focus on this, and then eventually you're going to be comfortable bringing this out and not get caught up in all this stuff back here. But just let the lead bar lead the way on the large chart. And then if that path were clear, and it's not, but if it were, well then I would look for an entry. But because it's not, I go into this if-then scenario. I go into if my small triggers get above resistance with odds favorable momentum, then I may look for the rules to be met for a medium probability trade. If none of my triggers ever break through, I have to sit and wait. I want to see what's going to happen. And guys, that's the hardest thing that you will ever do as a day trader is absolutely nothing. So while you're working on your patience, this is another one of those great pictures, right? Grab your capture software. Take a picture of your large chart. Draw an arrow and call it OFM. And then do the same thing. That's a term. And then remind yourself verbally, guys. Type it out. No trade, rule 2 not met. And then I want you to take this picture and I want you to put it in the room and I want you to get your virtual high five from me from being such an amazing chart reader. So as you work on this, David, get in the habit of doing this. Don't wait for a trade. Just start chart reading. Start taking pictures. And then what I can do is I can take this picture and I can go to my spreadsheet, right? So again, we're creating recognition through repetition. I'm going to come to the termination section and I'm going to put in this hyperlink. And this is called a textbook term, right? So now what I'm doing is I'm creating this database of what terminations look like. I'm creating a database of why I don't want to trade split triggers. I'm creating a database of how I'm going to manage my trades. I'm creating a database, repetition through recognition, of my NASDAQ stuff, guys. If you're trying to trade the NASDAQ and having troubles, I think I've had all the troubles you could ever have. Hey, Ace J, take care. And then finally, and this is the big one, guys, here's 250 pictures of client trades. Start studying them. Start burning these images into your mind so that they become easy. And what you'll find is that the less noise you give yourself, the easier the trades become. And I'm going to take a break because that was a really long first hour. It lasted an hour and 42 minutes. When I come back, we're going to look at all the charts that you guys have posted. When I come back, we're going to talk about, check it out. Oh my gosh, if then. Termination creates a full reversal. Full reversal gives me odds favorable momentum. Odds favorable momentum. What does my small chart look like? Here's my favorable large triggers. In the event of a pullback, that's my highest point of support inside of favorable large triggers, isn't it? Not a high probability trend trade because 43.35 is not broken. But with this much momentum from a good bottom, isn't this the area where the market is most likely to continue in the event of a pullback? That's how quickly your chart reads will happen with just a little bit of study. Guys, I'm going to take 5 minutes. When I come back, we're going to look at your pictures. We'll watch the live market. If you have questions, throw them in. And if you're brand new, take a picture of your chart and annotate it. Tell me what you see. I'll be back in 5 or so. forgot to unmute my other video. It'll just get you into trades that you shouldn't be in. Does that make sense? Great question, great picture. So what I like to tell people is keep focusing on your high probability trend trades. Keep focusing on those 50/50s with everything met, but build that market flow chart. And when you have a circle, see what the market flow chart said. See if it confirmed the momentum, right? Or if it was maybe a riskier trade, see if it confirms the area. And then what you'll do is you'll begin recognizing patterns with it, that'll give you a little bit of an advantage. I do love market flow chart. What I've found is that I just don't use it because I'm such a firm believer in odds favorable momentum and a clear path that I don't really need that confirmation. My charts are already doing it. D-Rock, was this yesterday? It was. I remember this trade, D-Rock. Got caught in a range there, right? And you waited for everything to agree and took the long. And then 50/50, divergence prints. And then it goes. All right, D-Rock, great question. Full bar away. Keep it simple. Is it a full bar away? I mean, it closed the gap, but it's not the gap theory. No, so D-Rock, either one of you. If these large triggers are not above the reversal bar marker, the gap theory is not in place. It still closed the gap to them. But it's a good top, right? It's a 50/50 divergence prints. You choose not to take it. 0%, so check this out. 0%, 11%, 35%, 41%, 36%. D-Rock, the numbers mean absolutely nothing. Divergence is like pregnancy. You either are or you are not. There are no degrees of it. So it's a byproduct of the calculation, and it has to show up. But it's when the line prints. You either have it or you don't. And on the gap theory, if these large triggers are above the reversal bar marker, then the gap theory is in play. It still likes to close it, right? But this lets me know where the areas should be looking at. We use the gap theory to define termination conditions, though. Does that make sense? Did that help? Oh, the chart Snorri pasted? Price accelerates away from the large triggers. The large triggers are above, and it does have a fib, right? Absolutely, that is the gap theory. It can have something to do with the midband, right? The midband isn't behaving as a termination condition, but that fib is. And that is, the midband is a termination condition, Joel, when the large triggers are a full bar away. Let's go to tops and bottoms. The midband will be a termination condition if the large triggers are a full bar away. So that's the gap theory, guys. That means that, since we're talking about it, let me find a picture. It is 100% the gap. It's not even similar, Joel. It is the gap theory. If price reaches the midband and the large triggers are a full bar away, the midband is behaving as a termination condition. So it just means no short trades into it, right? And then you see that gap theory happen. It may be fibs. Large triggers are a full bar away. It's likely to close the gap. Even if it's a fib, likely to close the gap. And you just see it over and over all the time throughout the day. So when price just accelerates away from those large triggers, there it is. It's likely to snap back and close the gap. Isn't that amazing? That is some timely happenings. And then if you scroll back, you'll see it a lot. Price accelerates off of this good bottom, hits the midband, hits resistance. Large triggers don't follow. and it closes the gap. There's your gap theory. Um, Price reaches support. Large triggers a full bar away. Closes the gap. Does that make sense, everybody? You see it all the time. Price hits one-to-ones. Closes the gap. When you stop loving money, Joel, when you decide you have more money than you need, trade in determination conditions all day long. I mean, that's the easiest answer, right? Great questions, guys. Great observations. And then D-Rock, great job keeping your rules met, right? Rules not met, therefore you didn't take a trade. It's the hardest thing you will ever do. PFI, everything says down, and you're just waiting for it. No such thing as an HVA confirmation. HVA is nothing more than a line where the seller said this is where we're going down. So there is no confirmation, it's just a line. And then Alinsky, let's go through this. So this high volume area prints at 52, right? Your area for potential entry is right at 52. That's a great way. It's not confirming anything. All it's telling you is that this is where the highest concentration of sellers, this is where they drew a line in the sand. So it's not a confirmation, but when it lines up, it just makes it a little better. And then do you notice how this signal happened but not at the areas? That's not a real signal. We still had to wait for the pullback to the areas. And if I'm not mistaken, that one did pull back and give an outstanding trade. Great job. Great pictures, guys. This is how we get better. Every day, just a little bit better. One step closer each and every day. Who's next? Ron trying to give me indigestion. He says it's on sim. Let's see what he did. Ugh, Ron says, no. See, Ron, I'm not going to get indigestion on this one. David left. Guys, nope, David, maybe you're still here. The difference between hoping an area holds, Joel, an HVA line appears when a reversal bar happens, and then there's what's called a breakout bar, which is the white bar immediately after. And then if the next bar is in the direction of the trade, the HVA line will form. So guys, here's Ron saying, you know what? I think that blue line may hold. But notice that he doesn't go long here, here, or even here. Ron waits for the third divergence to print. Ron says, this line has the potential to hold. 3 divergences confirms it even more. Let me get my small triggers above the large triggers, and I'll look for a quick little snippet. Ron, my stomach is just fine with that one. It's an awesome chart read. It's still an aggressive trade, but it's not a home run trade, which is why you didn't say, well, this one's going forever. Let me get in, let me make a little money, let me get the hell out. Nice trade. And then Manpreet from yesterday, and I think he's gone. And this is that one, guys, where annotation helps a lot. Because my most current bar says everything's going up, right? And we're just looking for a pullback. And I believe that's the pullback that D-Rock took. So it's a great look. Just, that's what we call a pre-trade picture. And then PFI took the same trade as Ron. Gets out at resistance. 3 divergences from a fib. I don't know what this is, but it worked out for you. Nice trade, guys. Same trade. Letting it get above the trouble before you look for an opportunity. Pretty cool. And then Alinsky, stranded sellers bar. First time seeing this. Sat on hands. Where were you in from? You got in up top. Oh, Alinsky, you're trying so hard. The trend is down. The smalls are below the large, right? Yeah, that's perfect. But if you show me a trade that fights everything, I have to mention it. I'm obligated. But absolutely, this is one of those antenna bars. And what this pink dot at the very end means that the sellers tried as hard as they could, but the buyers won. So you'll see these stranded sellers. You'll also see stranded buyers at extremes in the market quite a bit. You'll see it at the edge of fibs. You'll see it at stuff like that. And then again, this is one of those ones where notice how it's not odds favorable and the large chart didn't lead the way. And I know that you're practicing and it's totally cool, man. Make all the mistakes. But always let that large chart lead the way. It's going to take a lot of the stress of trading out. But you're absolutely right. That's a stranded seller. And it just means that the sellers pushed as hard as they could and couldn't seem to get anything done. The buyers ended up winning on that bar. And then Miss Debbie, when everything says down, you take an entry at the area and just get paid. Same way you do every day, right? Has anyone been in this class long enough to notice that every one of Debbie's trades look exactly the same? I hope that you have, because that really is the secret to success. Every one of her trades looks the same. Every one of her trades has odds favorable momentum and a pullback. Debbie's developed trust. Oh, shoot. Thank you, Debbie. When you guys that do the same thing every day post these trades, you make my job easier because you're really validating the idea that you don't need 1,000 trades. Just take the best trades. And then Ron, let's see. I bet it's odds favorable momentum and a clear path and a quick capturing of profits. It most certainly is. Everything says down. The path is clear. Ron has created a plan that fits his needs. He gets in, he gets out. Notice that he doesn't hope for it to get to the fib. And notice that he didn't hope that it broke the fib. He let it break the fib with momentum. Quick snippet. Here's the other thing. I stink at this trade. Guys, I can analyze it all day long. I stink at this trade. I mess it up every time I take it. If this is your trade and I tell you, hey, I got in short, exit ASAFP because it's going to pull back to the areas of resistance inside of favorable large triggers. Ron's trade is not my trade, but because Ron posts the same thing and I understand his rules, I know exactly what he's doing. And I know that it works great for Ron. It's his plan, not my plan. And then D-Rock. Let's see what you did, D-Rock. Everything says down. The momentum is its best, right? Your area's outside of the triggers a little bit. So you took a little more risk. Exited at the small, profit, felt uncomfortable. The momentum looked to be shifting. D-Rock, are you with me? The momentum actually shifted in your favor, if that makes sense. And I really like the way you executed this trade. And what this is, D-Rock, you guys ever watch Full Metal Jacket where they're running through the mud and they're like, we've broken beyond their control? Your chart reading, you let the large chart lead the way, right? You said, I have odds favorable momentum and I have a clear path. And because of that, I know that the market's likely to go down. This was your only line, right? And it was a little bit outside. And you said, I'll take it. I'll put the risk on there because the large chart leads the way. So it's a medium probability trade. That's the only thing that I really want you to realize about this, is that it's not high probability, right? It's medium probability, meaning that you have the advantage of momentum, you have the advantage of a clear path. You just fudged a little bit on your entry area, but with the large chart leading the way, it worked out beautifully. And then D-Rock, when you take one of these trades, and now all of your trigger lines agree, That's where that momentum really keeps moving. Great trade, dude. Great chart read. But if you're uncomfortable and you exit for a small profit, can't ever go wrong getting paid, guys. Can't ever go wrong getting paid. All right, Dwight, let's see what you have, my friend. Triggers are up on the 13.2. Price at fibs. Now wait. You just waiting for the break. Great chart read, Dwight. I don't have a clear path. Notice that the gap theory is in effect too. Those large triggers are a full bar away. What a great opportunity to sit on your hands and not do a darn thing. Rock solid, man. Rock solid. Oh, you guys have no idea how much fun it is to watch you grow. To watch you guys go from what's a trigger line to, hey, Mark, check out this awesome entry. John in Alaska. Cost of doing business, right? Are you still in here? Cost of doing business. You guys want to know the truth about this trade? Do you know what upsets me about this trade more than anything? Is that more of you didn't post this entry in this loser. I think that's what bugs me. You people that are learning the system, that are going through, that took this trade and potentially took this loser and took a second out of your day to beat yourself up for it, if you would have just posted in the room and gotten a little bit of feedback, you would have been like, dude, cost of doing business, right? Haven't got all the through? I hope everybody lost it. I mean, I never want you to lose, but what I do want to see, and Snorri's like, I did it all day long, right? All day long. I love it. I love it. So but here's the cool thing. It's an awesome trade, isn't it? Your window of opportunity is one line wide. Where shouldn't the market go? This is where you have to kind of weigh it out. Does it make more sense to lose 5 or 6 ticks and then look for re-entry, or does it make more sense to lose 3 points and get stopped out at support? And this is where your brain is going to tell you, I hope I don't lose, I hope I don't lose, hope I don't lose. But this is where your patterns tell you that if I go beyond that window of opportunity, to hell with it, I don't want it, right? I don't want it. I don't want to lose that much money if it doesn't go from the area inside of favorable large triggers. I want to take a little hickey, and man, I'll look for another entry. Remember, guys, you can let your winners be bigger winners by not letting your losers be bigger losers. Great trades, though, guys. Great entries, great rules. On that one, D-Rock, literally, if I get in at 37.25, if I'm going below 36, 35.50, I don't want it. I'm talking like 5 or 6 ticks risk on this one. Because if it goes beyond the area, and let's kind of define it a little bit. If it goes beyond the area inside of favorable large triggers, we have to start asking ourselves, well, which area is it going to go to? Is it going to go to that fib? Is it going to go to that 1-to-1? How many times can you keep moving your stop back before you decide which area it's likely to bounce off of? Does that make sense, everybody? Just from a management standpoint. Because I can keep sliding my stop back all day long, but that's not really in my best interest as a trader. What's in my best interest is identifying where it's likely to bounce, and if it doesn't, just get the hell out. Wait for the next opportunity. Cut the losses short. And then Snorri putting on the textbook, right there. Gap theory in place. Rock solid. Whoops, Safia, I almost missed you. Sorry. Safia says everything is up, the areas are clear, and you take it all the way up. Different set of rules, right? But it sure does work. It's hard to line up your prices on here, but you are in at 85, which means that you are dead center in the middle of Rockstarville. This is what I love about it, Safia. Guys, can we talk about progression at Safia's expense? And I hope so. Is and Safia, would you agree that that used to be your trade, right about there into trouble? And now it's here. And look at those results. Once you learn to squish that desire to be first, guys, once you start to squish that, oh no, it's going without me, and you recognize and realize that it's probably coming back, that it's not, it's just not yours. I love it, Safia. I love it. Joel, 4 or 5 ticks outside of my window of opportunity for me. 4 or 5 ticks outside of my window, and that's about it for me. I'd rather take a small loser and wait for the correct entry. And then Dano, everything says up. The momentum is absolutely flying, and you take the quick little pullback right at the area, right at the top of the triggers, and sure enough, it just rockets all the way up. Dano, beautiful trade, man. Beautiful trade. I might have missed this one because I would have been waiting for the ones inside, not the ones above. And then you would have been like, Mark, let's talk about advantages here. Let's talk about areas breaking. Let's talk about no divergence and strong triggers. And it's stacked, Mark. Stop tripping over pennies to save dollars. And Dano would have that moment where he's like, it's okay, Mark, you're making mistakes. You're brand new. But let me show you how you can do it. Great trade, Dano. And then Tony the Tiger. He's great. Everything says up. 50-50, no divergence. You take the entry and you manage it beautifully. Tony Tiger, you're the only person whose charts come in microscopic. So short with weak triggers didn't work, right? Long into the termination condition got you back to the termination condition. 50-50 with no divergence got you paid. Great trading, Tony. Great trading. Is that all the pictures? Nope. Gene. Everything says up. The momentum is strong. The entry is beautiful. And the first trade short. All right, so Alinsky, here's another one of your lessons. Are you ready? And then, Gene, let's talk about the short as well. If I'm looking for shorts, if I'm going to go against strong triggers up, I better at least be coming from a termination condition, right? I better hit that fib. Does that make sense, Gene? That's just a bad top with weak triggers. Didn't hit a fib, right? So that's kind of the expectation right there. And here's the challenge is you went short when the expectation was met. So not only did you not have a good top, but you also traded directly into a termination condition. Does that make sense? And you got absolutely starstruck with an HVA line, didn't you? That's okay. This is how we learn to use the market flow chart, guys. You learn to use the market flow chart by taking about 700 trades that you shouldn't normally take. So the same lesson for Alinsky. Let your rules be true, right? Make sure that the large chart leads the way. This is nothing more than a confirmation tool. And then the second one is absolute brilliance, right? And if you have to manage your trade that aggressively, it may not be the right trade. So Gene, let those terminations give you the look for the HVA. That is the first rule in an HVA trade, is that it comes from a termination condition. It's a good look, man. Nice job. This is a good look. That was just a little quick. Little quick. Wow! And now I have to put it back down smaller. There we go. What'd your large chart say, Alinsky? Did the large chart say go? People love to give me incomplete pictures. Let's see. So let's go to crude. What time was that? No, you're okay. You're okay. You're okay, man. I don't have timestamps either. What time was that? 9:34 was the price. So it had to be... It's okay. It'll come through normal. Can you just give me the timestamp? It was 11. Why is my chart saying... Oh, you know what? When I rebuilt crude, guys, I put it on the wrong date. It's the last date. My bad. No wonder it doesn't look anything like yours. There we go, at 11:24. So you had the momentum, right? Sorry, let me get this chart in place too. Some days, Joel. So Alinsky, tell me if I'm doing this right, okay? If I'm reading this the way that you read it. The momentum's not perfect, right? We're in an uptrend, the path is clear, but the momentum isn't outstanding, and the triggers are split. And you're saying to yourself, man, this is where, if it's going to continue, that's the spot where it's most likely to happen. So far, so good? Kind of your thought process? And you said, but because it's not perfect, and my money's important to me, I'm going to get market flow confirmation right at the area where it's most likely to continue. And if I get it, I'll take a long trade. So Alinsky, congratulations. You just learned how to read market flow in 8 minutes. That's a record. But large chart led the way, right? And then Alinsky, here's the biggest thing that people forget, is that confirmation costs money. Waiting for this bar to form means that you're not always in at the best area. You're a little bit off. So you use that reversal bar. Man, what a great job. I didn't do anything. I just said be a little patient. You're the one that pulled that off. But guys, that's exactly how you use market flow. The market's not perfect. The momentum isn't the best, but the path is clear. This is where it should go from. I'll wait for confirmation. And then that divergence right there lets you know it's only on the market flow, cream white. You took that one also, but you got it at the areas inside, right? You got it down here because you're not using market flow. You're saying with everything up in a clear path, no divergence, this is my entry. And I'm not saying that you needed the confirmation on this trade at all, guys. That's not at all what I'm suggesting. Because getting in at the areas will always make it more manageable. First target hit, break even. All day long. Snorri, that was my day all day yesterday. First target hit. I'd never hit my second target once yesterday. Not once. But I still reached my daily goal. Doesn't have to be home runs. Yesterday was Monday. You never hit your targets? Just one thing, Snorri? That's a little disappointing. I was hoping you'd have 1,000 things to ask me. What you got, man? Guys, you can ask me anything. The only thing that I may not divulge is my personal life. But you can ask me anything about trading, anything about the indicators. You can ask my opinion, but it'll be worth exactly what you pay for it, which is very little. This is where you guys having a microphone would pay dividends, isn't it? So while you're typing, let's see what's going on. We won't even worry about NASDAQ. Did this become an opportunity? Not the best. Of course there's instructions, Em. Go to the tutorial section. And then from the tutorial section, here is market flow volume analysis. Whoops, that was a mistake. So here it is from the user guide. There's your basic market flow from the user guide. It does come with a video, without a doubt. But I'm gonna reiterate this one as loud as I can. Um, let your rules be true. Use it as a confirmation tool. And then if you go to the Nexgen YouTube page and you hit the search bar and you type in market flow, there is enough to confuse you for months, right? So if you're watching market flow and you're doing these things, John Novak talks about every scenario he can ever think of. And he talks about patterns, talks about tops and bottoms. And the user guide links are on the other side of the page in Discord as well. Absolutely. Trend trade shorts using market flow, HVA. So guys, there's tons of information about market flow. And then mess it up. Keep it on simulator, mess it up. Take trades, post your charts. Let's talk about everything. Because that's really how you get to where you want to be, right? It's just conversations in the room, going through and reinforcing what we see, talking about advantages, talking about disadvantages, what I see, what I don't see, what you see, what you don't see. That's it. Snorri, did you change your mind on the question? Or did I miss it? Weak triggers on a 50-50. I can't even have a 50-50 without strong triggers, right? There's a bad top. Bad top hits the mid band. No worries. This is one of those weird ones, right? The mid band isn't a termination because the large triggers aren't a full bar away. I didn't hit the fib. There's resistance inside of favorable large triggers. Does it fit the rules? Or is that an ugly look? I don't know. This is where you guys have to ask yourself, is it worth $70 to see if this market continues down? All right, you've been documenting most everything, and at the moment your win rate following your rules 79%. Money-wise, though, if you go over everything, you would have made considerably more exiting both contracts at the first target. You're learning to change your management rules. I love it. So are you telling me, let me make sure that I'm reading that right. Are you saying that through your simulation, study, class feedback, and continuous practice, you're crafting a plan tailored to your personal goals based on your experience reading the indicators? See what I did there? And Snorri, you know, my brother and I were talking about this yesterday. So my brother and I talk a lot. Every day. We spend hours talking with one another. So go back because you guys all have your trade journal, right? Everybody has their spreadsheet. So Snorri, if you went back and you looked at your last 20 high probability trend trades, oh, keep them coming, right? And you're winning 80% of them, right? Which means that you took 16 winners on the high probability trend trades. 16, 4 lost. I love it. What a great ratio. Of those 16 that won, how many made $100 and how many made 300? And this is where it gets a little different because what you may find is that obviously every one of your winners hit the first target, right? But not necessarily the second. And guys, this is where management plans come into place. This is why going break even is in the very simple plan, because it gives you an opportunity to understand when holding for more may be advantageous. And that's where the spreadsheet comes in because it gives you that recognition. So Snorri, what you may say, and what I had to say yesterday, is I had a lot of 50-50 trades yesterday. I think every one of my trades were 50-50. None of them had a clear path, which meant that I took $100 on every trade. And because it wasn't a clear path, I got to break even quickly. And I think I had one or two where I changed it just a little bit. But for the most part, what if with high probability trend trades, dun, 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 what if with high probability trend trades, 90% of the time you hit your first target? D-Rock, 90% of the time you hit your first target. And you're trading a two lot, right? And you're comfortable and you're getting consistent and everything is great and you're getting accustomed to always hitting that first target. Does that make sense so far? Everybody's with me? And now it's time to add a contract. Does it make sense to add the contract at the $300 target that doesn't get hit as often, or guaranteeing 200 per trade, right? Because 90% of the time it hits that one. Your risk to reward gets skewed on the first target. You have to accept that. But that's where advantages come in, right? Because if everything is absolutely screaming and the path is absolutely clear and the entry is absolutely perfect and low risk, what are the odds of making $100 on that look? And if it's 90% of the time, guys, I've seen people take 5 contracts off at $100 and then leave one runner with a break-even stop, right? Because if I know that I get 5 trades a day and I know that 4 of them are probably going to hit that first 100, what if I have a 10 lot waiting at that first 100? When does that get screwed up? When you start trading with weak triggers, right? When you start trading into termination conditions, when you start taking trades that are outside of areas inside of favorable large triggers. Guys, that's when things become problematic. So Snorri, I think you're on a perfect path right now. Is you're looking at it and what you're realizing is that they don't all have to be home runs and you can still make money, right? And as long as the momentum is its strongest, and as long as the path is clear, the odds are favorable that you're going to hit that first target. That's why it's at $100, guys. And what you may find too is that maybe you can move it to 120. Or maybe you can move it to 130, right? It almost always hits 130 before it changes direction. And you'll build a trading plan. I love it. I love that you're doing that. And I love that you're looking at your win percentages. And I love even more. I'm full of love today. That your win percentage is at 79%. Is it just me or is that freaking outstanding for 3 weeks in? D-Rock, I imagine yours is similar, isn't it? It can be done, guys. You've never had two losers in a row? You're living a charmed life. That's it, one for commish. But Snorri, you're trading probably the most basic plan, aren't you? Are you trading the keep it simple plan? Are you focused on it? So, guys, here's the real question. Do you need more? To make money and be successful, do you need more than the simple plan? Is it ego that makes us want more? Because the market moved $1,000 and we believe that it's ours? It's greed. It's 100% greed, guys. But I like this, and I like that my new users, and I love that my brand new people are so focused on simplicity and finding 80% winners that what you're proving, guys, and you're making my job a lot easier. You are proving without a question of a doubt that this really is a recipe for success. All you have to do is get comfortable with the looks so that you can execute. Are you going to have losing days, Snorri? Absolutely, you will. There's going to be days where the market is wrong. There's going to be days where you take two or three losers in a row and you hit your stop loss and you have to just shut it down, right? And know that your rules work more than they don't. And for me, it's exciting. It's exciting to see this. And for those of you that aren't hitting your goals daily, I hope that you're taking notes. It can be done through simplicity. You can make more money than you could ever spend with simplicity. But you have to focus on the advantages. You have to work on your entries and you have to be a student consistently so that you can continue to get better each and every day. So, good stuff, guys. Thank you for sharing that, Snorri. It's funny because it's easy for me to sit here and say it works. I want you guys to prove that it doesn't work. That's what I really want from you. Is I want you guys willing to do the work to prove that it doesn't work. And if you do that, you're going to realize that it works. Nice job, Snorri. Nice job, D-Rock. Nice job, all of you that are taking the time to post charts, right? And then, Gene, this was you, right? How did you manage out of this trade? I know it hit your first target. I don't think it made your second target. Did you get to break even after the first 100? Because it turned from somewhere right around here. I know. After your second target, you're at +5. Cool. Snorri, it really is. And what's funny is that we all root for each other in here. You got the first two? That's awesome. That's NASDAQ, but isn't that pretty? Look at that. Right when I say it, look at the picture John Novak just posted. John, why are you fighting those small triggers? Isn't that amazing? Odds favorable momentum from a good bottom, clear path, entry a couple ticks above support inside of favorable large triggers. And that's it, guys. Willing to take it. Here's the biggest deal that I want you guys to see. John Novak, and I know this because we talk every morning. John Novak's trading a simple plan too, just with a couple extra contracts. Gene, have a great day at work, man. Thank you for posting. And then Gary says, if John can do it, I can do it. It's simple, isn't it? Odds favorable, clear path. Get in at the area. Absolutely outstanding trading, gentlemen. Talk about knowing where the market's likely to go. Ah, and it hit it to the tick, didn't it? And now no more longs. And that doesn't mean go short, does it? Not with odds favorable momentum. Don't fight triggers. Don't fight trend. Weak triggers at the bottom. Weak triggers on the 5-1. And look how high it pushes up. No reason. You rebuilt your charts, Gary. Man, it's good to do that every now and then. It really is. And now look at this. The larger flat, the smaller up, the mid band's held, the top is bad. I don't have odds favorable. I don't have favorable large triggers. Time to do a whole lot of nothing. How could you not? John, do you want me to go through the list of how you couldn't? Because you don't have the repetitions. The only way to not take this trade is if you don't believe wholeheartedly that it's likely to continue off of support inside of favorable large triggers, which means that you have to take more pictures, you have to present in class more, and you have to build that trust. My entry, John got in beautifully down here. My entry is this bar, confirmation. This is where John goes, hey, I'm long at 46, and I said, awesome, I'm in at 51. And you were whining, saying you hope they don't go. You know what's funny, guys, is when you start trading and it looks like this, right about here is where you start hoping for a pullback. You're like, come on, come on, come on, almost there, come on. There it is. And then you're just like, I'm getting in. Triple dog dare you to take my money. His stop was right here where the market shouldn't go. And John said, if you assholes want my money, you're going to have to come get it. He didn't move his stop too soon, right? As it went up, he trusted the large chart to get there. And guys, it's just a reflection of trust. Nothing to do on crude, indecision. Nothing to do on the NASDAQ from termination to termination. And then the S&P is not doing a darn thing either, guys. So if there's nothing to do, these are what we call go make a sandwich patterns. And then D-Rock, I did a complete cleanse yesterday. You had a fib there? Do me a favor, right-click on your chart and hit Data Series. Are you 10 days back on yours? I'm going to reload my historical data. I don't know if it's going to help, but I'm going to check. Does anyone else have a fib there? And then Snorri, weak top, straight to the midband. It could be unfinished business, right? So Snorri, if all of your indicators agree, you're probably going to take a shot. If it's, that's half of it. If you know what the challenge is, it's easier to manage through it, guys. If you know what the challenges are, it's easier to manage through it. Does anybody else have a fib at 90.58 where that divergence prints? D-Rock, can I see a picture of your chart? Alinsky, you do. Ron does not. Alex does not. Alinsky, yours looks like mine. Fib at 65. Ron, 65. Sometimes we're just going to figure out who the odd man out is. Same on yours. D-Rock. That's somebody messing with you, man. You have no fib, just at 90.65. Same thing. D-Rock, let's see if we can figure out why. Because I want you to have confidence, right? So you have a 5-1 fib. It still didn't make it. But you have a 5-1 fib, and then this fib quit printing, so that's cool. It's off in the distance. Do me a favor, D-Rock. Right click and go to indicators. And then I want you to go to the T3 Fibs Pro Trader. What's your update period? Is it 120 or is it 360 or 240? Maybe you're just recalculating fibs at a different time, which means that it's using a different set of parameters. Nope, so you have the 120. And your time frame is, you're an hour off. You are Central Time Frame, D-Rock, which means that you and I have different midnights, which means that your pivots start at a different time, which means that your fibs are going to print differently. Ha! We figured it out. So D-Rock, if your trading computer isn't something that you have to have for work, Snorri, great chart read. By changing it to Eastern time frame, just personal. See, like mine says 11:52. D-Rock, it's 8:52 where I'm at right now. But I want my midnight to be the same as Nexgen's midnight servers. So being in, not yet, huh? There was, well, that might have been your only shot. It's still not a great look, right, Snorri? I 100% support you not getting into that trade because your rules weren't met. But that's the next side of it, right? Eastern. So Nexgen's in an Eastern time zone. So D-Rock, one thing that you could do, if you don't mind being an hour off on your personal computer, is change it to Eastern, and that's probably going to line us up. But know that when you change it, it's going to violate your software. So you may need to get with Jason to run a file. But that was the difference. I knew we'd find it, right? So yeah, Snorri, New York time, just that East Coast. John and the gang are down in Sarasota, Florida, where all the New Yorkers go in the wintertime anyway, so it thinks it's New York time. You can, absolutely, but the odds of us ever lining up are going to be different, D-Rock, because what your software does, and let me show you. Whoop. Each of these midnights starts the day. So if my software is pivoting right here at midnight and going up, your software thinks that this is midnight. So it calculates everything that happens in it. Yeah, I think that my headphones just died, which means that you may be hearing me through my laptop. Let me try connecting them again. I may be out of juice. Yeah, so you guys are just gonna have to listen to me through the laptop. They're over on the East Coast. I apologize. It probably sounds echoey, doesn't it? But that's okay because that's the end of class. We made it. So yeah, they are Eastern, D-Rock. And then look at that termination condition. Who went long at the midband hoping? Anybody? Nobody in my class, right? Nobody in my class went long at that midband hoping. Ron went long here and got out right there, but he didn't go long down here.
Yeah, Ron, always great to have you here. Yeah, we're all over the place. Hopefully, well, actually, I'll be back in Texas in about 12 days. Can't wait. We still don't know if it's going to be Austin or Dallas, though. It's looking, now it's leaning more towards Austin. We'll see what happens. So, D Rock, if you golf, right now I am in Tri Cities, Washington. I'm in a city called Richland, Washington, in the southeast corner of Washington State. My kids grew up and moved out, and one of the great things about being a day trader is you can be a day trader from anywhere in the world. So next week I'll be here. I'm not either, so we'll get along just fine. Next week I will be teaching class probably from Twin Falls, Idaho, Salt Lake City, somewhere in Colorado, maybe Amarillo before I finally get back to Texas. Next week is the big drive, or the week after next. So um, you can do it from anywhere, guys. Debbie, have an awesome afternoon. Guys, have a great one. That's it. Class is done. Thanks for your participation. Thanks, everybody, for posting, for asking, and I'll see you guys tomorrow morning at 9 a.m. Be good, everybody. See you in the morning. Maybe. And then it doesn't.
How to hit a draw and how to hit a fake. When I'm hitting a draw, it feels like my arms are working from close to my body and away from myself, while the handle slightly twists to the left. When I'm hitting a fake, it feels like my arms are away from my body and they get closer to myself, while I slightly twist the grip to the right. Simplify shit, understand shit, and you can control the flight. Teaching a couple quick and easy feelings for teaching a couple quick and teaching a couple quick.
The deep muscles of the neck responsible for keeping your neck upright are weak and overstretched. If you've got neck pain and back pain, you got to try the iron neck.
Was noticing such rapid results in my patients. They're getting strong through that full active range of motion that lasts, right? And lasting results.
I obliterated my neck and back pain, honestly, in just a couple of weeks, and I only used it for a few minutes every day. I recommend that they get one of these for home. There's really no other device that can compete with the iron neck.
Finally found it, right? We finally found the thing that's helping you become pain-free. It's not like saying, like, put it on and it's just, oh, okay, yeah, this is what I've been missing. The deep muscles of the neck responsible for keeping your neck upright are weak and overstretched. If you've got neck pain and back pain, you got to try the iron neck.
Was noticing such rapid results in my patients. They're getting strong through that full active range of motion that lasts, right? And lasting results.
It obliterated my neck and back pain, honestly, in just a couple of weeks, and I only used it for a few minutes every day. I recommend that they get one of these for home. There's really no other device that can compete with the iron neck.
Finally found it, right? We finally found the thing that's helping you become pain-free. It's kind of like seeing color for the first time, right? You put it on and it's just, oh, okay, yeah, this is what I've been missing. The deep muscles of the neck responsible for keeping your neck upright are weak and overstretched. If you've got neck pain and back pain, you got to try the iron neck.
Was noticing such rapid results in my patients. They're getting strong through that full active range of motion that lasts, right? And lasting results.
It obliterated my neck and back pain, honestly, in just a couple of weeks, and I only used it for a few minutes every day. I recommend that they get one of these for home. There's really no other device that can compete with the iron neck.
Finally found it, right? We finally found the thing that's helping you become pain-free. It's kind of like seeing color for the first time, right? You put it on and it's just, oh, okay, yeah, this is what I've been missing. The deep muscles of the neck responsible for keeping your neck upright are weak and overstretched. If you've got neck pain and back pain, you got to try the iron neck.
Was noticing such rapid results in my patients. They're getting strong through that full active range of motion that lasts, right? And lasting results.
It obliterated my neck and back pain, honestly, in just a couple of weeks, and I only used it for a few minutes every day. I recommend that they get one of these for home. There's really no other device that can compete with the iron neck.
Finally found it, right? We finally found the thing that's helping you become pain-free. It's kind of like seeing color for the first time, like you put it on and it's just, oh, okay, yeah, this is what I've been missing. The deep muscles of the neck responsible for keeping your neck upright are weak and overstretched. If you've got neck pain and back pain, you got to try the iron neck.
Was noticing such rapid results in my patients. They're getting strong through that full active range of motion that lasts, right? And lasting results.
It obliterated my neck and back pain, honestly, in just a couple of weeks, and I only used it for a few minutes every day. I recommend that they get one of these for home. There's really no other device that can compete with the iron neck.
Finally found it, right? We finally found the thing that's helping you become pain-free. It's kind of like seeing color for the first time, like you put it on and it's just, oh, okay, yeah, this is what I've been missing. The deep muscles of the neck responsible for keeping your neck upright are weak and overstretched. If you've got neck pain and back pain, you got to try the iron neck.
Was noticing such rapid results in my patients. They're getting strong through that full active range of motion that lasts, right? And lasting results.
It obliterated my neck and back pain, honestly, in just a couple of weeks, and I only used it for a few minutes every day. I recommend recommend that they get one of these for home. There's really no other device that can compete with the Iron X.
Finally found the thing that's helping you become pain-free. It's kind of like seeing color for the first time. Like, you put it on and it's just, oh, okay, yeah, this is what I've been missing. The deep muscles of the neck responsible for keeping your neck upright are weak and overstretched. If you've got a neck pain and back.
Hey Siri, I need a phone number for Horn Rapids Golf Course.
The phone number for Horn Rapids Golf Course on Clubhouse Lane in Richland is 15.
Yeah, I played around yesterday and I left my Yeti cup in my golf cart. I was wondering if maybe you guys have it. It's a bright green Yeti. That's my one. Cool. I'll swing up there a little bit. Thanks, man. I thought Friday was your interview with the session? Question mark. How are you going to interview with them? Question mark. We can make it to Dallas by the 12th, no problem. I love that the two jobs you are most excited about are the two jobs that are hunting you the hardest. Because really, knowing where you're going to well. I agree at 100%. Period. Oh my goodness, and look at that.
Order submitted. Order canceled.
Hey. There it is. Okay. Just disabled it again. There's our first one. 9 hours. Okay. That's not much.
I really wasn't pretending and I actually didn't care. I started acting like I didn't care. But then I realized I really wasn't pretending and I actually didn't care. I started acting like I didn't.
Freedom, confidence, and then you as you look. I know as soon as I sit in that chair, it's going to happen. Everyone will notice. It's a nice philosophy.
Robert of Philadelphia Hair Design.
At Roberts, they know exactly what to do. Freedom, confidence, and then you feel as good as you look. I know as soon as I sit in that chair, it's going to happen. Everyone.
What's your favorite flash? So he's a lying hamstring curl. I'm thrown on my front. So in that position there, my hips are more extended. So as I curl up towards the top, I'm actually able to get a more shape. चाहूं मैं तुझको एक गुनाह है क्या मेरा मांगू दुआ हद तू ही हो सवेरा आंखों में रहूं तेरे दिल में बसेरा इतनी सी आरज़ू रखूं रब से मैं अकेला चाहूं मैं तुझको एक गुनाह है क्या मेरा मांगू दुआ हद तू ही हो सवेरा आंखों में रहूं तेरे दिल में बसेरा इतनी सी आरज़ू रखूं रब से मैं अकेला चाहूं मैं
And maybe that's a question you should ask China. Don't ask me, ask China that question, okay? And maybe that's a question you should ask China. Don't ask me, ask China that question, okay? And maybe that's a question you should ask China.
I really don't care for it. I come from a Jewish family, which of course you already know because Kyle's from the same family. I like to read, and I have these polyps on the backs of my knees. I don't know what they are. Oh my God, I'm not gonna make it. I'm not gonna make it. Oh, and I hope one day to be an investment banker. Must, sergeant, need $40.
Okay, why don't you go ahead and take a seat, Kyle?
Where should I sit? There's no place to sit down here.
Yes, unfortunately the school seems to be completely out of extra desks, so you'll just have to share with your cousin.
What? Oh, all right then.
Now let's get on with our lesson about the...
A wooden desk all that are available. I usually prefer the plastic ones because these give me splinters.
I'm sorry, Kyle, you'll just have to make do. Now let's get back to the
lesson. Is it cold in here? I realize we're in the mountains, but do we have to freeze today?
Now, Kyle, I need you to be quiet. In my class, you need to be able to concentrate. Concentration is the key to succeeding in my class.
Maybe we'll have to send him to concentration camp. Damn it. Time then. I really don't care for it. I come from a Jewish family with...
This is fun.
This is the device relieving back pain that is trusted by hospitals across the country. My back pain keeps me from sleep. Stick that in your pipe and smoke it.
Man.
I'm not worried about nothing because love doesn't make me mind. The only reason that I'm trading just to make money every day through advantages, not being hopeful.
It'll set up. Lunch is almost over.